start to worry about whether or not CapEx spend, again, it's not that it's going to go, it's not that people are not going to spend, but that rate of spending changes. When that second derivative turns negative, people start to get concerned about where valuations are. We're not quite there yet. That is something to look at as we go forward.
Sarah, great to see you. Sarah, join me here for the first half hour of the day here, first half hour of the show here as we get started the trading day. Sarah Hunt of Alpine Saxon Woods joining me here in New York. I want to get a check on the stock market right now. Market's higher after that opening bell, and maybe I can look at some selected movers that are making moves here in the early morning of trading here. Pulling up MOV on the terminal, looking at what's gaining here. Tesla and Apple both up this morning. Alphabet as well. Alphabet under pressure a little earlier in the week here. Micron Technologies, we continue to talk about the AI trade. It up, let's see, about 1% here. Point to some laggards here if we could. The other side of the coin here, Broadcom down 2.6%, 406 at 6 points down. Eli Lilly, Applied Materials, they are lagging as well. Maybe we can look at some sectors too here. Again, just a few minutes into the start of the trading day on Wall Street, we see a lot of these sectors in the green here, including communication services. That's been so much of our focus here over the course of this last week. Energy up higher as well. And then looking at sectors not doing as well. The financials down slightly this morning, not by much. Healthcare index, we were just talking about that, Sarah and I, it down about 0.75%. All right, coming up here, the NASDAQ 100 is less than 1% away from a bull market in the past month, just as strategists game out a potential AI bubble bursting. We're going to get into that next on Bloomberg Open Interest.
Historically, bubbles were characterized by a notion of if you build it, they will come. In the late 90s, when we were building out data networking equipment, people were putting huge amounts of fiber in the ground on the assumption that it would come. And economists like to go back for reasons that are unclear to me to the railroads. They were also, if you build it, they will come. What is unusual about AI right now is the builders are so far behind the demand, it's absurd. We have a backlog of more than $25 billion of demand. That there are none of us, not AMD, not NVIDIA, that can keep up with the demand that your employees are driving. That's, in a lot of ways, the opposite of a bubble. We are chasing. Our customers and their customers are moving at the speed of software. And we're moving at the speed of real estate, data centers. Right, and so we are behind.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Time now for our top calls. Here's Bloomberg's Hema Palmer with some of the analyst action in focus on this Friday morning.
Thanks, David. Yes, we're looking at 3 consumer stocks today. Kicking it off with airlines, a bullish bet on Boeing. The airline is winning its strongest Wall Street backing since 2022. BNP Paribas says Boeing's post-COVID uncertainty is over, and Argus expects a meaningful ramp-up in production. Moving over to media, Fox is catching a pair of upgrades from JP Morgan and Wells Fargo. JP Morgan likes the boost from World Cup viewership, a better outlook for political ads, and distribution strength at Tubi. Meanwhile, Wells Fargo says Fox's deal to buy Roku will create more financial muscle for spending. The shares are up about 4% this morning. And let's end on some home goods. Bernstein is upgrading online furniture store Wayfair to outperform. It thinks Wall Street's underestimating how well the business is trending and thinks sales can come in stronger than expected. Shares up a little bit this morning. Maybe some good news if you're doing a little home redecorating, David.
Indeed. Emma, thank you very much. Appreciate that. Well, optimism around the AI trade is also being met with caution as strategists at Citigroup and Bank of America game out a bubble playbook. A Citi analysis found the Philadelphia Semiconductor Index is in bubble land after it rose over 2 standard deviations above its long-term trend in real terms. Let's discuss with Bloomberg Tech reporter Ryan Vlastelica. Ryan, great to have you with us once again. Let's pick up right there. Just the degree to which there are fears in this market right now of a bubble. We were talking about circular financing just a few minutes ago. What stands out to you when you look at the Philly stock index right now, semiconductor index right now?
Well, it seems like what these investment banks were really talking about was just how quickly we've seen the stocks recover. Obviously, it's done extremely well this year. I believe the second quarter of the year was its biggest ever quarterly gain. But since then, we really saw a pretty steep retracement that it is now clawing back some. And the scale of that, which has been supported by some positive fundamentals, including some of the earnings we got this earnings season, I think has some people cautious about, is it moving up too fast, too soon?
Is it a widely shared thing? Am I right to mark the moment here as we get a pair of these notes? Has there been kind of growing generalized concern about this, or is it still something that's kind of not really in the mainstream?
I would say the idea of a bubble is something that people talk about sort of in the abstract, and it's something we've been hearing about really for more than a year now. People concerned about, like, hey, are there a lot of parallels to the dot-com era in terms of the build-out of AI infrastructure, or is there, a parallel to the build-out of internet infrastructure 25 years ago? So that's always been sort of in the ether, but I don't think people are really, en masse calling for some kind of bubble that's expected to pop in the near term. Most people continue to say, even though things have really moved up a lot, the fundamentals remain pretty supportive. We are seeing more growth, better profitability, a better ROI from some of this hyperscaler CapEx spending. So that is really part of it, but certainly people calling a bubble is not new.
Viewers will know I've been watching Applied Materials here over the course of the morning, and I wanted to ask you about that company, kind of in line with what you were just saying, Ryan, which is here's a company that seems to have done pretty well. The outlook for the future looks pretty good as well, and yet we see it down here 3% this morning. What explains that, just kind of the general sense that you're getting of why this company is down on this Friday?
One thing I would just note is that Applied Materials, I believe it had more than doubled year to date going into this report. So that's just an indication that expectations were quite elevated. Now, I think the report was pretty strong. I think it beat expectations on both the top and bottom line. The forecast was pretty strong. It is seeing a lot of tailwinds associated with artificial intelligence, including demand for memory-related chips. This is a company that is involved in building out the machines that are used to build out the chips. So it is seeing a lot of positive trends right there. So as far as this modest decline in the stock, following the year-to-date rally, I'm not sure people are too surprised by that.
Maybe I could close by asking about this Bloomberg report about the revenue run rate at OpenAI, $40 billion here, and just ask you to put that into some context. I mean, I think there's going to be a tendency here to kind of want to match that with what Anthropic's doing, how it's faring as both of these companies speed toward an IPO, and I gather there's some nuance there. Difficult to compare these two companies directly when it comes to that revenue metric. But what do you make of this news, and what does it tell us about the contours of that push to an IPO that we have here, presumably in the months ahead?
Well, I know there has been a lot of caution about OpenAI and like how much growth is it seeing? Is it able to meet the targets it's setting? And this really does have a lot of broader implications for the market because so much of the AI trade is tied to these big LLM providers like OpenAI, like Anthropic. So if OpenAI is seeing some better trends, that's going to help reduce some of the concerns people have about its ability to monetize all of its AI services, its ability to pay for all the AI infrastructure it's building out. That will ease concerns about, going back to the whole bubble idea. If we start to see these big LLM providers really start to get on a stronger financial footing, I think that's going to have positive implications across the space.
Ryan, great to talk with you as always. Thank you very much and have a good weekend. That's Bloomberg's Ryan Vlastelica joining us from Chicago. Coming up, we are talking commodities. commodities with portfolio manager Doug Daly. How to play the trade through ETFs. That is coming up next here on Bloomberg Open Interest on Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Every weekday, Bloomberg puts a spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Commodities remaining in focus as the war with Iran passes the 5-month mark. From oil to uranium to gold, the market's favorite trade keeps changing, making it harder to pick the next winner. Doug Daly co-manages the Core Commodity Natural Resources ETF, which takes a broader approach to the commodities trade, and he joins us now. Doug, great to have you with us. We'll get to oil here in a moment, but I wonder in the broader commodity space, where you see the most opportunity at this point, and as I say, a lot of vacillation here in terms of what's been doing well.
Absolutely. Thank you for having me. Really, I think that's the key, is there's a lot going on in a lot of different places right now, especially with everything going on with AI, data center build out, the hundreds of billions of CapEx we're seeing. Truth is, we're going to need a lot more energy across the board, not just traditional energy like oil and gas, but also renewable, alternative energy. These are things that by investing via natural resource equities, we're actually able to get exposure to, as opposed to just futures alone.
Talk a bit more about that, the equities kind of that you're looking at that make a part of the portfolio here. We had a head of a nuclear fuel company on a little earlier in the week. Very bullish on the promise of this being something we're going to see a lot more of, not just in the U.S., but around the world.
Absolutely, and we focus on uranium miners, are a good example of something we incorporate in our portfolios to gain exposure to the nuclear trade, as well as all the materials and other things that go into the construction of all this power infrastructure, all the the data centers. Just again, the breadth of materials, the breadth of energy sources we're going to need to fuel these massive demand increases is really staggering, and that's why our approach is really an all-of-the-above type of solution.
I wanted to ask you about metals, and I know there's been a lot of inflows into gold here. Of course, this is still very much a haven and something people turn to when there's a lot of uncertainty. What have you seen when it comes to gold kind of in recent weeks?
So gold has obviously been very volatile. We know for the mining companies of gold, it's been a great environment to be a gold miner right about now. Aside from higher fuel costs today, gold prices where they are, these companies are making phenomenal margins, and we've seen those companies up triple digits last year, and they're also doing well again this year. So it's a good time to be a gold miner with prices as they are.
I know that oil is not your sole bailiwick here, but you're tracking that, I'm sure, and we've kind of been through this moment where you have the president kind of jawboning there being some solution here to this conflict in the Middle East, and oil has risen and fallen in equal measure day in and day out here. How are you kind of thinking about oil at this moment in time? We heard from the IEA about just sort of the low levels of resources that many of these countries have now, the need to replenish those stockpiles. What's your advantage on the oil sector right now?
I think it's in line with that. I mean, the difference today versus at the start of the conflict is we still have very little uncertainty about what's going on in the Strait, but inventories are at operationally critically low levels right now. So it's a very different environment. We've seen China pull back on its purchases, but again, they're going to run through that at some point. We're going to have to build up those inventories, as you say. That should be a strong floor of demand. And you have not seen CapEx spending in the oil companies, particularly, trying to take advantage of what's going on with prices right now. They have continued to be very restrained, enjoying free cash flows and strong margins. So we're not really seeing a big supply response either. So it's a delicate situation in oil right now, and at $80 or so, it might be a little complacent.
Yeah. You bring up China, and we're looking ahead to this meeting between President Trump and President Xi in Washington in September. That's when it's scheduled to take place, and I gather that rare earths is going to be on the top of that agenda. There's been a push, just as there has been for greater emphasis on the nuclear industry here in the U.S., on rare earths as well, for the U.S. to do more and kind of shore up that supply chain. How are you thinking about that side of the natural resources picture here, the emphasis the U.S. is placing here on having to get more of that under its control?
Absolutely, and we're seeing it not just in rare earths, although rare earths is a great example because China controls 90 to 95% of the refining of rare earths. They also control a strong majority of the actual materials themselves. But we're seeing that across the board. It used to be that how cheaply something was produced was the most important factor, right? And today, that's really starting to shift towards where it's produced being just as important as how cheaply, right? If a 20-mile strait in the Middle East gets shut down and all of a sudden all the things that flow through it are not getting to you, you need to rethink how you're supplying these critical materials, including rare earth elements, which are crucial for so many things, so many military and consumer technologies. So we're not just seeing it in rare earths, we are seeing it across the board. I think you're starting to see countries and companies start to think about how we can bring that production back to, friend-shoring or near-shoring or on-shoring it to ensure that security of those supply chains going forward.
The minute we have left, just tell us a bit about the thesis of the funds or where you see it playing a role in a person's portfolio.
Absolutely. We think it's really key for a portfolio. If you look at the proportion of the S&P 500, for example, that is invested in commodity-producing companies, 50 years ago, it would have been almost a third of the index. Today, it's less than 5% of the index. A lot of people think they have exposure to these companies, when in reality, they actually don't, just through their natural broad equity exposure. We think this fits well with that to help bolster that exposure, because again, these are the companies that make all the real things that the world uses day in and day out, and has continued to use more and more of as our population grows, as technology advances. So we think it's a really important part of a portfolio and one that many investors might be lacking right now.
Doug Daly, thank you very much. Great to see you here in New York. Doug Daly of Core Commodity Management joining me here on set, and you can tune into ETF IQ on Mondays at 12 p.m. New York time. On Bloomberg Open, I just want to take a look here at what's moving as we get into the trading day, close to 10 o'clock Wall Street time. Looking at the major indexes, first we see the S&P 500 up about 0.1% here, the NASDAQ up about 0.25%, the Russell 2000 up 0.2%. There was some talk about there being some kind of takeoff here in small caps when we were on the show yesterday. Not seeing that yet in dramatic effect. The Dow barely moving this morning. Taking a look at Brent crude, we were just talking about this a moment ago, the challenges that the U.S. administration is facing here with the issue of oil as the conflict in the Middle East continues rounding that 5-month mark. The president saying this was going to be a much shorter live conflict than in fact it has been. We see oil at $86.95 a barrel here, absent any kind of deal to reopen the Strait of Hormuz. Looking at a few companies in particular, NVIDIA has been in this marquee position over the course of the week. It's still up there ever since that announcement of that financing deal with those 6 major financial firms, including Goldman Sachs and Blackstone and BlackRock and KKR. It up 0.1%, and very much still focusing on the AI trade. Yes, the macro story, the AI story as well. SanDisk up 6.1% this morning, and Applied Materials, we've been talking about, down 3.6%. This is a company that had great earnings, great forecast, but the stock has more than doubled here over the course of the last year. Reddit joining the S&P 500 here in the days ahead, I believe on the 18th of August, it up 15% on that news. And we've talked about AI, we've talked about macro. Space Systems, York Space Systems, down 15%. This is still a story that we're tracking here on Open Interest. The space story very much front and center here as we get to this part of earnings season. Coming up in the next hour, UMich Survey Director Joanne Shu on the latest consumer sentiment read, and then Flock CEO Garrett Langley on his surveillance firm's recent backlash. We're going to hear from the commissioner of League One Volleyball. It's coming up on Bloomberg Open Interest on Bloomberg Television. Stay with us.
Today, Wayfair sees immense potential in brick-and-mortar stores.
When we got into physical retail, our view was that, even if the market continued to grow for e-commerce, probably a large chunk of the market in the space would stay offline.
Kate Gulliver showed me around Wayfair's new 150,000 square foot Atlanta flagship store.
When customers who have seen us online come into the store, they're generally a bit surprised by actually the breadth of what we offer. Often if you're going online, maybe you're looking for something particular. But when you come into the store, you walk in, you see the market square, you see all these pillows, you see the decorative accents. So what we're seeing actually is that in store, we do really well in some categories that online are, less a percentage of the total.
How does technology help in kind of making it seamless online to store?
I think
and vice versa.
The biggest thing is for the customer on the front end, that she can be in the store, that she can actually shop here, go back home, complete that purchase. And if you look at these sort of price tags and everything, they're all these digital tags. That's because they're the exact same prices they are online. So you're not going to be surprised that you saw something in the store and then you decided to purchase it online, that it's somehow different and that the offering is different. It's actually very consistent. But when she's here, she can have her app open, and everything that she's doing here can be very similar to what she's doing at home. And I think that consistency is quite important.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
The Trump administration has this morning gone to the U.S. Supreme Court asking to let the White House resume construction on the ballroom while an appeal of the case plays out. Luigi Mangione, accused of gunning down the CEO of United Healthcare on a Manhattan sidewalk in late 2024, is expected to plead guilty to federal charges this morning.
It comes after a 20-month legal saga where Mangione has faced dueling state and federal charges while amassing a vigilante fan base, having raised more than $1.5 million for his defense. A potential guilty plea in his federal case could bolster his lawyer's argument about double jeopardy and potentially sideline his state murder trial, which is set to begin in less than a month. If he pleads guilty to federal stalking charges, he could spend the rest of his life in prison. Peter Haralambous, ABC News, New York.
30 years after the death of rapper Tupac Shakur, a jury has been selected in Las Vegas in the murder trial of at least one person.
The jury of 6 men and 10 women will begin hearing evidence to decide if Dwayne Davis, street name Keefe D, is guilty of murder. For years, he's boasted about his role allegedly ordering the hit on Shakur and even providing the gun that night in Las Vegas. He even published a book admitting to all of it, saying he went out looking for Shakur and Death Row Records founder Suge Knight that evening. But now he claims he was lying.
ABC's Alex Stone. Democratic Senator Richard Blumenthal demanding more information about conditions aboard the USS Abraham Lincoln following numerous reports of moldy showers, broken toilets, and attempts to go overboard from the aircraft carrier USS Abraham Lincoln. Agriculture officials now cautiously optimistic about a pest first detected in June from Texas. ABC's Jim Ryan.
After months of working to control the spread, the U.S. Department of Agriculture says that only 3 cases remain active in 2 Texas counties along the Mexican border. The inactive cases involve animals that were either euthanized or died as a result of a screwworm infestation.
You're listening to ABC News. A passenger jet forced to abort takeoff in Chicago.
Blown tires and an aborted takeoff on a busy runway at O'Hare. A United jet packed with more than 150 passengers on board slamming on the brakes after two main gear tires blew out.
Taking off, and all of a sudden we just heard this like big bang.
Everybody was like going a little crazy, and my mom was getting scared. I was getting scared.
United saying no one was hurt. The passengers forced to deplane right there on the runway.
ABC's Matt Rivers. U.S. Ambassador to Israel Mike Huckabee calls it a horrific act of terror. For 5 nights, Israeli settlers have been surrounding 3 Palestinian homes on the outskirts of a town in the occupied West Bank. The families inside have not been able to leave for food, water, or medical assistance. Tropical storm Lala taking aim at the Big Island of Hawaii. ABC's Melissa Adon with more from Kona.
We're talking about rainfall, totals up to 2 feet, and some catastrophic areas because we're looking at dangerous winds, erratic conditions when it comes to that. And of course, that surf that Hawaii is so well known for, we could see waves up to 15 feet. Some of the national parks for Hawaii's volcanoes already closing, and airlines have already warned travelers if they're going to be heading out here, prepare for flight disruptions.
Italian authorities have recovered 3 paintings by Renoir, Cézanne, and Matisse worth millions. They were stolen earlier this year from a museum in Parma. Sherry Preston, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, originals and the Bloomberg Business app.
Good Friday morning from the Bloomberg Interactive Broker Studio in New York City. To our worldwide audience, we are streaming live on YouTube. We are also on Bloomberg.com. It is Scarlett Fu, Paul Sweeney. This is the Bloomberg Intelligence Program. Coming up, we're going to check in with Joanne Shu, University of Michigan Surveys Consumers Director. We got the UMich sentiment today. Numbers came in well below expectations. We'll break that down. Consumers a little bit uncertain out there last month. Megan Horniman, CIO of Verdant's Capital Market Advisors. She'll join us to give us her market call. Then we can check in with Matthew Bloxam, Bloomberg Intelligence Senior Tech Analyst. We'll get some latest on some of these technology stories out there. OpenAI revenue surge is set to double 2025 levels ahead of what could be an IPO later this year or early next year. Gautam Mukunda, lecturer at the Yale School of Business, will join us on his column in the Bloomberg Opinion column section. Big business bought influence. The bill is due. We'll see what's going on there. Randall Williams, the Bloomberg Business of Sports, talk about some of these big trades and big moves we've seen. The Lakers selling, the Yankees selling a piece of the New York Yankees for some additional capital. So a ton to talk about there in the business of sports. But right now, let's go to Alexis Christophers for a Bloomberg Business Flash.
All right, thanks a lot, Paul. We've got some modest gains for the broader market. Dow Jones Industrial Average, though, is down by about 43 points. S&P 500 up about 10, and NASDAQ Composite adding 33 points. The NASDAQ 100 is climbing 90 points, or 1/3%. Oil has been wavering all morning long. It is now modestly higher, with Brent crude up 1/3% at $87.35 a barrel. West Texas Intermediate crude up 0.1% at $81.41 a barrel. The Bloomberg Dollar Spot Index down more than 1/3% at 1199.44, and the Japanese yen is up 1/4, or actually 1/3% at 158.98 against the U.S. dollar. Materials posted better than expected quarterly results, but its outlook has underwhelmed investors, and shares of Applied Materials are down about 4%, also among the worst performers in the S&P 500. But shares of Reddit racing ahead nearly 15%. 2 years after going public, the social media platform will be added to the S&P 500 index Tuesday morning. And the computer storage company SanDisk climbing today. The stock is up nearly 9% after it gave a bullish forecast at its investor day. We've got Bitcoin down more than 1% at $62,623, and spot gold up about 1% at $43.90 the ounce. That's a Bloomberg Business Flash. Back over to Paul and Scarlett.
All right, Alexis Christophers, thank you so much. We appreciate that. It is Paul Sweeney and Scarlett Fu. Scarlett, back in the office, thank you. You've been away for a little bit.
Yeah, I took off Monday through Thursday,
Nice.
and I thought, I should come back in on a Friday because no one's in the office, but
Exactly.
that's the best time to come in.
Exactly right. All right, let's see what's going on in the market here. As Alexis was just giving us the lowdown here, we got some red and green on the screen here. Let's take a look at some of the stocks on the move, and we can do that with Bloomberg's Avalon Purnell. Avalon, what are you looking at today?
Have to start off with Reddit. That's ticker RDDT. It's currently surging 15% most intraday since July 1st. And that's after the social forum company is set to join the S&P 500 before the opening of trading on Tuesday. The company will be replacing Avalon Bay Communities, which did agree to merge with Equity Residential in a deal valued at more than $50 billion in May. Still, though, the company does remain down about 20% this year as concerns about AI and also how exactly they're going to be weighing these various deals with Google and others about accessing their content for AI use. So still has a long way to go to make a little bit more for those investors.
Absolutely. What do you have for number 2?
Applied Materials, that's ticker AMAT, currently slipping about 4.3%, and that's after the semiconductor manufacturer reported only modest upside in its third quarter results and gave a fourth quarter outlook that generally disappointed. Stifel actually noting that they did anticipate their gross margin guidance to be just a little bit better than just flat, and so that was something that was key. Though I will say that this company is kind of just the next victim or really example of the AI trade saying that, good is sometimes not good enough. Vital Knowledge also noting that they seem to be following in the same line as other companies like Coherent, Cerebus, and also Cisco, which also shed value after reporting earnings and guidance that, while ahead of the street, just wasn't necessarily strong enough.
Very good. One more. What else you got for us?
AeroVironment, that's ticker AVAV. Although currently it's now only up about 0.4 of a percentage point. Earlier, they were up nearly 10%. They actually are a drone maker. And yes, this is all happening after the Trump administration said that it plans to apply a 100% tariff on imports of unmanned aircraft systems and their components. Needham also highlighting that this tariff really represents just another big push to rapidly build the U.S. drone industry and also shows that expanding production has become a national priority. And that news is also sending other drone makers like AVEX and drone parts company maker Unusual Machines higher this morning as well.
Aren't most drones made in China? Yeah, that's what I thought. Okay. There you go. It's another way of making sure that, Chinese manufacturing is something that we'll end up paying more for. All right. Thank you so much, Avalon Purnell. Really appreciate it. She is one of our Bloomberg News equities reporters. And for more conversations like this, subscribe to our Stock Movers reports. These are 5-minute audio reports on the biggest winners and losers in the stock market. You can subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Okay, we got some data this morning on consumer spending. Retail sales unexpectedly weak for the month of July. And now we're getting another picture of how consumers are feeling right now. And the University of Michigan Sentiment Index coming in at 51, that is an unexpected decline. People had, the economists out there had anticipated it to stay relatively level to the previous one's 55.2. Let's bring in Joanne Shu. She is University of Michigan Surveys of Consumers Director, joining us from Ann Arbor. So Joanne, just give us the lay of the land here with this unexpected decline in the sentiment reading for the month of August.
Absolutely. So consumers are feeling less optimistic about the economy. This stems 2 consecutive months of pretty sizable increases. We didn't see much movement on personal finances, but expectations for business conditions, both in the short and the long run, really deteriorated this month. Consumers are quite worried about potential weakness in the economy ahead.
So anything in particular? Because I think we've had a lot of fluctuations in energy prices. So, consumers see that at the gas pump. But anything in particular? Because the employment environment still seems pretty strong.
When we ask people about labor market expectations, those are pretty flat. Those haven't changed all year, really. So at this point, what it looks like consumers are reacting to is not only gasoline prices, which did tick up in the last few weeks, but also this general concern that continued conflict in the Middle East, the continued closure of the Strait of Hormuz could have knock-on effects on business conditions going forward. And consumers are still expecting substantial inflation, at least in the year ahead. So there is general concern that these constraints, shipping constraints, supply constraints, could spill over to other parts of the economy going forward.
Yeah, it's definitely the inflation expectations that I'd like to hear more on, especially for the year ahead. We're looking at a 4.3% increase for the 1-year outlook. For the 5 to 10-year outlook, we're looking at 3.3%, which is steady with what we saw in July. How much of this is tied to gas prices? When we see gas prices come down, these inflation expectations tend to follow?
We do see a decent amount of movement in particularly short-run inflation expectations that is connected to gas prices, which makes sense because that is the one good where the price tags are visible to everyone on the street 24 hours a day. So that shouldn't really be that much of a surprise. What's interesting is that that consumers are really starting to worry, or have been worried for the last few months, that this increase in gas prices could spread beyond gas prices, but to goods overall, and that would lead to higher inflation across the board. Consumers are worried that it's not just gas prices and that business conditions could be affected going forward.
Joanne, in the past, some of the sentiment data has been impacted or been influenced by political affiliation. Is that playing into this data point at all?
The decrease that we saw in sentiment between July and August was seen across the political spectrum. So Democrats had lower sentiment than last month, independents, and as did Republicans, who were actually the ones who exhibited the largest decrease between last month and this month. And in fact, Republicans right now are at their lowest levels of sentiment since the last presidential election. So really, this is a pretty broad-based decrease in this early month reading in August. Beyond the political spectrum, the groups that also had really large declines between last month and this month were older Americans, less educated Americans, and lower income Americans. These are all groups that are going to be more sensitive to reductions in their purchasing power because they don't have large buffers of say, stock wealth that will help cushion them through an increase in the cost of living.
Joanne, I'm increasingly seeing the word stagflation come up in different economists or analysts' remarks on the state of the economy. Is there anything in the data, in the report that you guys just published that kind of backs that idea up, at least the perception of it among consumers, the idea that inflation will stay elevated, but the economy is stagnating, is slowing down?
What we see in the data is that consumers perceive some weakness among multiple dimensions of the economy. Not only are they expecting inflation to increase and to stay high, they are also expecting relatively weak labor markets. The key thing, though, is with labor market expectations, those had a major decline about a little over a year ago amid tariff developments, and they just haven't recovered. So this isn't really a new thing, this anticipated weakness in labor markets. But overall, consumers are seeing weakness both in terms of labor markets as well as, the negative risks, unfavorable risks to inflation. But when you ask them which one is the bigger problem for the economy, they're much more likely to name inflation and unemployment.
Joanne, thanks so much. Appreciate it. As always, Joanne Shu, Surveys of Consumers Director at the University of Michigan. So we get the retail sales data here this morning, Scarlett. Around 8:15, we had Aditya Bava. He is the U.S. economist for the Bank of America, and he comes in, and consensus was for 0.1% gain in retail
nominal
sales.
growth, if anything.
Yep. And he comes in, and during our conversation, he says, oh, yeah, the B of A, our forecast is negative 0.6%. We're the lowest on the street. And we were like, what? Why would you be so far out of consensus? And he had this whole bunch of reasons, and they all made a lot of sense. He leaves, walks out at 8:25, walks over to Bloomberg Surveillance. The data comes out at 8:30. Minus 0.6 right on the top. So we said, all right, we got to get this guy back in studio here. So when he was done his TV hit, he came right back in here and he said, this is what we were looking at. This is why we think it's important. And, it was
They have a lot of card spending data that they look at, right?
That was a big part of it. And he said, the Prime Day is in a different period, was pulled out of this month into June and this and that and some weather and so on and so forth. So we're like, wow, these guys are pretty good at B of A.
Yeah, I mean, they have the, on the ground reading, essentially, of how people are spending, how people are consuming. It's concerning, especially if you're looking at inflation and inflation expectations. And we just got word from University of Michigan that people expect inflation to rise 4.3% over the next year. And it's interesting to think about how the Trump administration is framing all of this, right? They say they don't see this idea of a K-shaped economy. Scott Besson, he's talking about a C-shaped economy where the bottom end of the income range is starting to see gains.
Yep.
I don't know if that's the case, but we'll need to wait it out a bit.
Yeah, we will have to see. But anyway, we got the retail sales here today, a little bit weaker. And of course, I guess the key question there is this just kind of a one-time blip, or is this something in the beginning?
The start of something, yeah.
Yeah. And given that the consumer is roughly 70% of the economy, what does that mean? Citibank still calling for a rate cut in 2026. This is
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Alexis Christoforous. A weaker than expected retail sales report for the month of July, coupled with two subdued inflation reports this week, has traders betting the Federal Reserve will not have to rush to raise interest rates anytime soon. But we do have all three major stock indexes now modestly in the red in what is thin trading volume on this summer Friday on Wall Street. The S&P 500 pulling back from that record high yesterday, now down just about 2 points. Dow Jones Industrial Average slipping about 30 points, and the NASDAQ is off now 44 points, giving up an earlier gain. NASDAQ 100 has also reversed an earlier gain and is now down about 10 points. Oil is higher, though, this morning. Brent crude up 0.5%, 87.51 a barrel. WTI crude at 81.42 a barrel is up about 0.2%. And the Bloomberg Dollar Spot Index down 0.3% at 1199.56. Tyson Foods will close several additional beef plants due to a prolonged cattle shortage in the U.S. beef packing industry. Shares of Tyson up 4%. Fox Corp, the media company, is rallying today and the best performer in the S&P 500 after receiving a pair of analyst upgrades. And SpaceX has completed a $60 billion acquisition of artificial intelligence coding startup Cursor. This is a key part of Elon Musk's bid to gain ground on rivals Anthropic and OpenAI. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash. Back to Paul and Scarlett.
All right, Alexis, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney, we're here in our Bloomberg Interactive Broker Studio in New York City, streaming live on YouTube as well. Let's check in with our next guest, Megan Horniman, Chief Investment Officer, Verdance Capital Partners, coming to us via that Zoom thing from Hunt Valley, Maryland. Megan, really strong performance yet again in the equity markets so far this year. We've even, when you look at the S&P equal weighted, actually outperforming a little bit the price weighted S&P here. How do you think about breadth in this market and what it means for the health of this market?
I think we've seen what it's done with the health of the market this year because we've had that broadening, that rotation out of those Magnificent Seven. It's a very different year than it was last year, where it was primarily made up of that Magnificent Seven as far as the percentage of the total return. But this year we're seeing some broadening. I think there's been some optimism that the economy has been able to withstand, the war in Iran, oil prices that went above $100 briefly, inflation that's continued to be stubborn. So you're seeing that investors started to move to some of those unloved areas. And I think it's a good sign for the market this year. I am concerned in the near term, though, that there may be some complacency entering the market for a lot of reasons.
So how do you position for that complacency? Do you wait for something to happen, or do you start moving ahead of that, ahead of something potentially coming to pass?
Well, the first thing that you want to do, especially in the middle of the year, you want to take a look at your portfolio. Has anything that you're invested in, has it run up significantly where you actually are overweight just because of the market movement? You want to rebalance that, bring that back down. That there's nothing wrong with taking some profits that we've seen, especially in things like infotech, in communication services, those types of sectors. Make sure that you have that portfolio weighting that you're supposed to have. And also, you want to make sure that you don't have a ton of exposure to those high PE growth types of names, because we are concerned that this interest rate environment is just going to be a challenge for those types of equities in the future. Not only the long-term interest rates, we do see when bond yields rise that those types of sectors, technology, growth, they don't like higher interest rates. And we do think that inflation is a persistent concern that will eventually have to push the Fed to the table, whether that's September or December. We are in for a rate hike here this year.
Rate hike this year, that's challenging for the markets, but maybe I think what the markets are probably telling us with the move higher this year is earnings outweigh that. So how confident are you in earnings for the next several quarters, given the really strong first half we've had?
Yeah, I mean, the return this year has been primarily made up of the earnings growth, not necessarily PE expansion, and that does differ from the prior years where it was all PE expansion. So I think it's been very good news. It has helped support the market. I mean, nobody can say that second quarter earnings weren't amazing, but if you go forward, what investors are starting to get concerned about is how long can this pace of earnings growth keep up? We are concerned that it continues to be upgraded, and there might be some the chance here that we'll see some of these earnings be downgraded, not only for the second half of this year as we move into those earnings seasons, but then into 2027 as well.
In retrospect, how big of a boost did tax refunds, or I should say refunds from the tariffs, play into corporate profitability?
I don't think that you're seeing a big impact yet, and I don't know that it's going to make a huge impact. It's not a significant amount there, but remember, they just started those refunds, so that may be something that we see some of that impact in the second half of this year, but I don't think it's necessarily going to really move the needle one way or the other. I still think that there's other fundamental reasons why earnings are just too elevated at this point.
Fixed income market, Megan, we can sit here at a 2-year treasury and get 4.15 here, 4.15% here. Should investors be thinking about longer duration? Should they be thinking about taking on credit risk? How do you guys approach it?
We wouldn't take on credit risk here. I mean, you're looking at high yield spreads below 300. If you take out some of, you got to go back to almost 2000 Great Recession to see these types of tightening on credit spreads. So you're not being rewarded for any of that risk. We're seeing investment grade spreads also significantly low, but you're also seeing a lot more supply with some of these hyperscalers coming to the market in issuing bonds. So we're more concerned in the long end of the curve structurally because of what's going on with the deficit. And this isn't just in the U.S., it's a global problem. We do think that this is going to weigh on the long end of the curve. So from a duration standpoint, you want to be short duration to the benchmark, focus on that 3 to 5 year part of the curve. I think that that's where over the long run, you're going to mitigate that interest rate risk. There's going to be a lot of volatility in long term. I mean, we saw this week that the 10-year came out, the highest yield since about 2007. I believe the 30-year came out at multi-decade highs as well. This is a concern going forward. Net interest costs are a problem, the deficit's a problem, and it's not going to be forever that people just forget about this. Eventually, people are going to start paying attention to this.
Right. And like you said, it shows up in the auctions for the 30-year and the 10-year from time to time, but in this week's case, both of those auctions. Megan, is there a way to get all your bond-like exposure within equities? I've heard some advisors swear off fixed income as an asset class completely and say, go and own insurance companies as bond proxies instead. You get the dividend and you also get the price appreciation.
No, I don't think that you're also going to have the price volatility when equities decline, regardless of what it is. Either they don't fall as much or they're still going to decline. So I don't think that they're the necessary proxy there, especially since they are interest rate sensitive. So if interest rates rise, that's going to impact those sectors. We've seen it happen before in the equity market. You can't disregard fixed income altogether. You just want to be defensive in that approach. Be careful of high yield, be a little bit careful of investment grade, focus on the short term. There are some AAA type of asset-backed or CLO tranches in the very short term that you can pick up a little bit extra yield. And while you might see some short-term volatility if we have any type of a credit situation, they're AAA rated, credit quality is good. So that's where we think you should focus in, whether it's intermediate term treasuries as well, safety of those. Just be defensive with your allocation there.
All right, Megan, thank you so much. We appreciate that. Megan Hordeman, she's the Chief Investment Officer for Verdance Capital Partners. Let's get back to taking a look at the tech space. A lot of news out here every single day. It seems like, fortunately, we have a lot of smart people we can talk to that can explain all this stuff to us and put it in context. One of them is Matthew Bloxham. He's the Senior Media and Tech Analyst for Bloomberg Intelligence. He's based in London. Matthew, I want to start in the AI space. Why not? Because that's where we always seem to start. OpenAI, one of the lead players there, reported recently by Bloomberg News, is on track to generate annualized revenue of more than $40 billion based on its current performance. That is roughly double its run rate from the end of 2025. These growth rates are just extraordinary here. What does it tell you about OpenAI in this competitive market?
Yeah, well, it tells you that they're still arguably lagging their biggest rival in Anthropic, because I think we heard back in May that Anthropic was doing closer to 50 billion. I think it was about 47 billion. And we saw some reports yesterday in the Financial Times that by the end of this year, Anthropic's thinking it's going to get to maybe 100 to 120 billion dollars of annualized revenue. So I think, there's still a gap for OpenAI to close, but I think the momentum is probably better than people had maybe worried, because, remember back earlier in the year, it felt like maybe things weren't going quite according to plan with OpenAI, and perhaps some of the internal targets had been missed. And, they made a real effort to kind of develop their enterprise offerings, so what they offer into corporates has historically really been about the kind of consumer subscription model and looking into advertising. And so I think this tells you that the enterprise offerings are starting to gain some traction. Some of the products like Codex, we're just seeing there, which is their equivalent of Claude Code, and ChatGPT Works, which is more of a kind of generalized kind of multi-application workflow tool. So it seems that they're kind of getting some better traction in the enterprise market, and I think that's what they need to demonstrate to kind of tell a good equity story to the markets when they do eventually come with their IPO.
So if this was better than expected, I'm curious what this means for how people might reassess what Anthropic's prospects look like. I know Anthropic said in May that its run rate revenue had crossed $47 billion, and we don't know if, it's an apples to apples comparison between the two, but now that OpenAI looks to be perhaps doing better than what some people expected, how do you extrapolate that for what it means for Anthropic?
I think it just kind of tells you what we already knew, really, that this is a pretty aggressive race between the two companies to kind of really gain a strong foothold in the enterprise market, and I guess really just address every single type of AI opportunity that there's today and could be kind of evolving. And obviously, yesterday we had that news that Anthropic might be buying a small kind of startup for $6 billion to primarily help the kind of efficiency of how technology uses their models. And then also on top of that, you've got the China models, which are kind of broadly comparable in performance, but a lot cheaper. So there's like multiple dimensions to this competitive race, and that there's still a lot for all of these companies to do to execute well and justify what's potentially going to be a very big multiple when they come to market.
Matthew, 30 seconds left here. Is the expectation that enterprise customers will have more than one AI service or software or whatever we're calling it?
Yeah, absolutely. And we clearly see that today. Many companies are parallel running Gemini, ChatGPT, Claude, and I think already you're kind of seeing some kind of discernment about which models work best for different types of applications. So I think just like in every other bit of software, that there's clearly going to be a handful of dominant players, but most corporations have a multitude of software providers. They figured out, which ones work best for which particular use cases and workflow, and I think that's not going to be any different in AI.
Interesting. All right, Matthew, thank you so much. Really appreciate it. Matthew Bloxham, one of the few people in Europe at the desk today working. He's a senior media and tech analyst for Bloomberg Intelligence. They're talking a little bit about some of these tech stories. And again, run rate revenue, which is kind of where these startup AI companies, how they're kind of getting measured by the street, is because it's growing so quickly. Give us your latest annualized run rate revenue. Right now, it's $40 billion for OpenAI.
Plus, right?
Yeah,
more than 40 billion.
Yeah, exactly right. So there you go. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 10:40 on Wall Street. I'm Alexis Christoforous from the Bloomberg Interactive Broker Studio. We have got stock indexes lower across the board, modest losses, we'll call them, with the S&P 500 pulling back from that record high we saw yesterday, down 5.5 points at 77.93. Dow Jones Industrial Average down about 74 points now, and the NASDAQ down 55. NASDAQ 100 down 29. Russell 2000, though, in the green by just about 12 points. Also in the green, oil prices. Brent crude is up 0.7%. High of the morning, by the way, at 87.70 a barrel. West Texas Intermediate up 0.4% at 81.61 a barrel, and the Bloomberg Dollar Spot Index down 0.3% at 1199.49. We've got shares of the drone company Red Cat up 8.5%. President Trump announced a slate of tariffs on imports of drones and their components to address what he calls national security threats, especially, the president says, coming from China. Shares of Applied Materials down more than 4% after the semiconductor equipment maker posted a strong outlook, but it wasn't enough to please investors. And Charter Communications won final approval for its nearly $22 billion acquisition of Cox after concessions to California regulators. This clears the way to create the largest U.S. internet and video provider by subscribers. Spot gold, $43.84 the ounce. Bitcoin at 62,710. And we've got the 10-year yield up 2 basis points at 4.67%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash. Scarlett and Paul.
All right, Alexis, thank you so much. We appreciate that. Scarlett Fu, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube and at Bloomberg.com. Well, a recent poll found that contributing to the president's new White House ballroom was seen as the most damaging thing a company could do, with a net negative of 37 points. Let's welcome in, dig into that a little bit. We can do that with Gautam Mukunda, lecturer at Yale School of Management and a Bloomberg opinion contributor, on his column entitled Big Business Bought Influence, The Bill is Due. Gautam, thanks so much for joining us here. President Trump has done a pretty admirable job from his perspective of courting corporate America and getting their support in many different forms. Put that into context for us, because that's not something you see too often.
Yeah, I mean, too often is kind of, it's like the nice way of putting it, Paul, but we've really never seen anything like a president leaning on companies and individuals for donations in this way. You know, every politician fundraises, or almost every politician. There's always some scent of favoritism, or, you know, that there are reasons people are so suspicious of campaign finance. But the idea of the president saying, hey, I have this personal project that's sort of borderline legal, and you guys are just going to write the check for it, and mysteriously companies that write these checks somehow keep getting regulatory favors, I'm sure that's just a coincidence. Like, it looks bad. It looks really, really bad. And the public, you know, even members of the public who are sympathetic to the Trump administration broadly, they really don't like corruption. And this kind of looks like that.
To be fair, for the companies that have donated to the the White House ballroom, is that a personal project? I mean, at the end, you know, when President Trump leaves office, that ballroom will still be there, and it will be, the White House will be occupied by whoever the American public elects next.
So I guess what I'd say is that is true, but it is also true that the president seems so personally obsessed by this ballroom that he keeps like discussing it in formal sort of meetings with other heads of state. There wasn't any demand for it. No previous president has asked for it. And whatever it is, you know, it is when you see the drawings, the designs, it is elaborate in a way that, you know, is, let's say, unique to the Trumpian aesthetic. So I think it's fair to say that this is a personal project, because there was no demand for it from anyone except President Trump.
One could argue that it's understandable why these companies would do whatever they have to do to stay out of the crosshairs of the president, because the president can, in fact, impact your business, your industry. I mean, Tim Cook, he stepped down as CEO, but he's kept his role as chairman, and most people feel like it's simply to manage the relationship with A, China, but B, President Trump.
No, Paul, I think that's exactly right. And I honestly have a lot of sympathy for sort of the leaders who are put in this situation. I think I said on your show like a year ago that Tim Cook did this. He gave Donald Trump this sort of gold statue or a gold thing as a way, and got these deals, and all it cost him was his dignity. And I think that's right. Like if you are a corporate leader, the pressure on you to do this is immense. They're sure, the consequences of not doing it are very real. The reason I wrote this column is I want to point out that just because in the short term this might feel like the right thing to do, in the long term, this is going to blow up, and it's going to blow up really dramatically in your face. Like, whatever you think the likely outcome of the next set of elections is, eventually someone is going to come to power who does not view this sort of thing favorably, who's going to say, we're going to do some investigations, we're going to have subpoena power, we're going to call you up in front of Congress. And, if there is one email that you sent, one text message that says, well, this is a shakedown, and really I feel like I'm bribing and I don't have a choice, but I have to do it, that's going to come out, and it's going to look awful. And it's not just the Democrats are going to be enraged that you were willing to support this sort of stuff. The average American, the polling data is very clear, really, really does not like it when people are seen to be buying influence, and you are not going to have the allies that you normally think you do. And then just to compound that problem, the usual response of that sort of for business, for all, is like, look, I'll just write checks to the other side, I'll fund both sides, and I'll buy my way out. I just don't think that's going to work as well as it used to. It's pretty clear that the rise of small dollar donations and the sort of loathing of that kind of influence trading is becoming so powerful that I think a lot of Democrats and maybe even some Republicans are going to start saying, look, I don't need your checks. What I need is the credibility that comes from coming after you.
Okay, so you say that even not saying anything, not doing anything is kind of a decision of sorts to kind of comply with what's happening. Do you see evidence of any company exhibiting the behavior that you would find respectable?
So, no, I mean, so as I said, I wrote this column sort of to give people the idea what you have to do, right? This is a tough situation. You are in a thing. When the president of the United States leans on you, right, that's an elephant leaning on you. You have to do something. My suggestion to companies is what they need to do, and they need to do this proactively, is come out and basically say, look, this is such a disaster. This is so awful, that we're forced to do this, that we need to come out and say, like this tool needs to be taken out of our toolkit so no one can ever ask us to do this again. And you saw previous attempts in campaign finance reform, championed by John McCain and people like him. The business community was usually pretty strongly against it because campaign finance was an enormously powerful weapon in their arsenal of sort of trying to get the government to do what they wanted it to do. And it might be time to say that that weapon is not worth the cost of having it because of what's happening right now.
Do voters really care about this kind of stuff, Gotham? Isn't it just the economy?
So the thing is, I don't think that these are unlinked, Paul. So if the economy is going great and everything is perfect and we're, then I think the temperature goes down. But one, right, the surface level numbers on the economy are pretty great right now, yet voters, they seem to be incredibly unhappy. And, we always have this puzzle. Why is it that voters seem so unhappy when the economy seems like it's doing well? But I think, that there is a linkage in most people's mind between things that seem like corruption and favoritism and self-dealing and why they themselves are not benefiting from this economy that all the numbers say is doing so well. And we've seen this, by the way, this is not just in the United States, right? This is the story that more than anything else probably explains why Orban lost in Hungary. That it wasn't just about sort of anti-democratic motions and things like that. There was this real sense of of elites, the most powerful people in the political system and the wealthiest people in Hungary, who were sort of sucking up the wealthy economy into their own hands and using corrupt tactics to do it. That didn't go down well with the average Hungarian, and I'd be surprised if it goes well with the average American.
Okay, my mic is on now. I'm curious, Gotham, what kind of feedback you've gotten from folks in the business world to this column?
It's been interesting. I'll say is that nobody likes being leaned on by the president, right? Even people who are pretty sympathetic to this administration will say, the taking Truth Social and having people pay $100,000 to get early access to Trump tweets, even if it's not illegal, they think it's gross, right? Like it sticks in their craw. There's something deeply wrong about it. And I think there's genuine fear that this is going to escalate. That what we've seen in the first 2 years of year and a half of the Trump administration is that these things keep ramping up.
Gotham,
you don't know where it's going to end.
We got to leave it there. Thank you so much, Gautam Mukunda. He is a Bloomberg Opinion contributor. This is Bloomberg Intelligence on Bloomberg Radio.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Boy, what a week for the business of sports. The dollars, when you think about the Los Angeles Lakers being sold, you think about the investment taken by the
I was
New York
confused by
Yankees.
this because I was like, the Lakers were for sale?
That's my first question, too. When did that happen?
Yeah,
So,
I
but
mean, I
now
watched
we've-
Winning Time, and there was no indication that anything was happening with this show. And granted, that was back in the 70s and 80s, but still,
Yeah.
no clue.
Exactly. So the backstory, we're learning more and more about the owner of the Lakers and the cash needs there. Randall Williams, he follows this stuff. He does it for a living. He's the U.S. sports business reporter for Bloomberg News. What do we know about the Lakers process and what actually happened there with the sale to Bob Iger and Mr. Kushner?
Well, Joshua Kushner and Bob Iger were looking into the Las Vegas NBA expansion team. They were considered one of the two front runners there. And when I spoke to Bob Iger earlier this week, he told me that an intermediary suggested, or an intermediary said, that you should go look at the Lakers. And shortly, I imagine that this deal was closed, or this deal happened and announced on Wednesday. I imagine that happened either Saturday or Sunday. Within 72 hours of whoever told Bob Iger to go look, they had a deal, and that's how it happened. I think the valuation is remarkable, and it's shocking. It's one of the most shocking things that I've seen in covering this business.
What's so unusual is that typically when there's some kind of deal, especially like with such a high-profile asset like the LA Lakers, there's reporting around it. We get wind that, there's discussions. There was no whiff of that whatsoever. This was very, very closely held. Does that mean that they negotiated directly? There are no investment bankers involved?
Bob Iger said there were no investment bankers, so I take
Do you
him,
believe that?
I do. Because I do think that, let me be careful with this. I do think that when there are a lot of parties involved, and especially like an investment banker's job is to get the best price out of this. And I think that, I don't know that happened. The Cowboys, Sportico valued the Cowboys at $15.5 billion earlier this week. I think the Lakers, to an open market, might have gone for 14 or 15, and it didn't happen that way. However, a $2.5 billion rise from last year when the Lakers sold for $10 billion to Mark Walter to now $12.5 is remarkable nonetheless.
And we now know with some further reporting that Mark Walter, the owner of the Lakers, has financial challenges and in other parts of his portfolio, personal portfolio, and that. So to a certain extent, he was certainly a distressed type of seller here.
Yeah, I think that some of this Lakers money could go towards that, and I think Bloomberg has reported that some of this money will go towards some of the loans that he has out and that he's looking to cover. The Department of Justice, of course, is investigating some of his businesses outside of the sports world.
Yes.
However, his sports holdings are among some of the most, I'd say, he has some of the best sports holdings across the industry. He has the Dodgers, he has the Lakers, or had the Lakers. He has the Cadillac F1 team, the PWHL League, which is a professional women's hockey league. So he has a lot. And you have to wonder, what else is next?
Right. If he's a distressed seller, what else needs to be put up for sale? It feels like Bob Iger and increasingly Joshua Kushner, the brother of Jared Kushner, which is the president's son-in-law, are kind of becoming the new Mark Walters in a way, right? Because Kushner in particular has a lot of sports interest through his Thrivent firm. I mean, it feels like they're in every professional sport.
Thrive Eternal bought a piece of the San Francisco Giants earlier this year, but Joshua Kushner had bought a piece of the Memphis Grizzlies. He sold that to buy a piece of the Miami Heat. He will have to sell that piece in order to buy the Lakers. However, he's had an interest, and Bob Iger told me that this is like a beachfront property, and that Joshua Kushner described the Lakers as the Mona Lisa of sports franchises, and he's sort of right. I think that when the Seahawks sale was happening, that there were parties involved that were like, the Seahawks are great, we're going to break Josh Harris's record no matter what, but the Seahawks can't sell for more than the Lakers. It's the Lakers. And, we saw that. The Seahawks sold for $9.6 billion, and now, not long after, we have a $12.5 billion Lakers sale. So I think they're all right.
Dumb question here. Is this deal with Kushner and Iger, is it closed?
No.
Okay, so now if I'm an investment banker, I'm calling all my clients saying, let's get in there. This is
No, that's exactly right. I talked to someone yesterday who was like, I have no doubt that we will at some point get involved. And Iger himself told me that they will be looking to add partners and that they did not go out to the investment community to ask if people wanted to be involved in this, meaning that they've reached an agreement, and then when they find the money or the rest of the money, then they'll take this to the NBA's Board of Governors, and the Board of Governors will approve it.
I'm going to come in at $14 billion bid. Then what happens? This thing's not closed.
I think
we have a signed deal. But
there's probably a memorandum of agreement, and who knows how long that has to go. That could go 6
It's not a public
months.
Company where you have to do a go shopping provision.
Exactly. And I think there's probably some billionaires out there who are like, if I would have known, then I would have. But you have to keep in mind that Mark Walter essentially was going to be the mayor of Los Angeles in terms of sports franchises because of what he had there. Owning the Lakers and the Dodgers is a pipe dream. Now he's having to get rid of one, and he said he doesn't want to sell the Dodgers, but we'll see.
Okay, very quickly before we let you go, Adam Silver, the commissioner of the NBA, this has his blessings, presumably?
I think that it would probably raise eyebrows at the league office, but he has a tight relationship with Bob Iger. Bob Iger, of course, used to run Disney, who, of course, is an NBA broadcasting partner. And so I think that this team landing in safe hands is a comfort level to the NBA, but you have to worry for the future. Is someone else going to buy a team and want to flip it if it can add $2.5 billion in profit? I don't think that's likely, but it's a possibility.
All right, Randall, thanks so much. Randall Williams covers all the business and sports for Bloomberg News. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. The next hour of Bloomberg Intelligence starts right now.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good Friday morning. This is Bloomberg Intelligence with Paul Sweeney, Scarlett Fu, and Charlie Pellet. We are broadcasting live from the Bloomberg Interactive Broker Studio in Midtown Manhattan, also streaming live on YouTube as well. We had some data today that showed that retail sales fell unexpectedly last month, and consumer sentiment also declined for the first time in 3 months. So there's this mood that perhaps things are turning a little bit, as even as inflation data this week showed that price growth is slowing down a bit. So we're going to dig into all of that. Mary Shore is Senior Equity Analyst at Columbia Threadneedle Investments. She'll talk us through the retail sales report. Julia Fenzeris is our U.S. economy reporter. She's written a great story here on how hobbies are winning the battle for Americans' paychecks. People are maybe saving a little bit less and spending more on things that make them happy, that contribute to what they say is their mental health and what they want to enjoy their money on. Anurag Rana is our senior tech analyst, and he's going to talk about the buyout of Workday and how that would signal or could signal low AI risk. And finally, Chuck Lieberman, co-founder and CIO at Advisors Capital Management, will discuss the outlook for the markets here as the S&P 500 just off its record highs at the moment. But first, before we get to any of that, just a reminder that you can always contribute to what's happening on Bloomberg Radio by, of course, for subscribers, messaging us, letting us know if you have any questions for our guests, for our experts. Visit Bloomberg.com/AskRadio. This is an exclusive feature for Bloomberg.com subscribers and terminal clients. Again, that address is Bloomberg.com/AskRadio to join the conversation and help shape what we discuss on Bloomberg Radio. All right, let's head over now to Charlie Pellet for a Bloomberg Business Flash.
Hi, thank you very much, Scarlett and Paul. We are at the lows of the day, just about the low right now on the S&P. Initially did see a pop right out of the gate, but right now looking at losses down 8 points, 77.90. Stocks churning ahead of the weekend here, down by about 0.1%. We are seeing signs of a slowdown in the main engine of the economy. That is reinforcing bets that the Fed will hold rates steady to prevent further weakness. Today, we are seeing stocks decline. Right now, the S&P pulling back at 77.90. We've got the Dow down 78 now, drop there of 0.1%. NASDAQ down 0.3%. NASDAQ 100 index down 0.2. Interestingly, though, on a day in which we're seeing a lot of selling, Russell 2000 index of small cap shares, it is up now by 0.4%. The SOX down by about 0.6%. The VIX holding just below 15. The 2-year 4.13%, with the 10-year 4.66%, the 30-year 5.24%, gold at $43.88 the ounce, up 0.9%, and West Texas Intermediate crude 81.61 a barrel, up now by about 0.5%. Among the morning's economic reports, consumer sentiment as measured by the University of Michigan fell for the first time in 3 months as households worried about worsening business conditions and rising inflation. Joanne Shu is the school's director of surveys of consumers, and she was a guest right here on Bloomberg Intelligence.
Consumers are feeling less optimistic about the economy. This stems 2 consecutive months of pretty sizable increases. We didn't see much movement on personal finances, but expectations for business conditions, both in the short and the long run, really deteriorated this month.
Joanne Shu of the University of Michigan interviewed on Bloomberg Intelligence. And by the way, you can hear more of that conversation on the Bloomberg Intelligence podcast. You can download it wherever you get your podcasts. Earnings news, Applied Materials, AMAT down now by 5%. It did give a solid forecast, but that forecast underwhelmed investors, a sign of the lofty hopes surrounding a company that is key to the AI boom. Again, Applied Materials down by 4.9%. I'm Charlie Pellet, Scarlett and Paul. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio in New York City, streaming live on YouTube as well. As Charlie was just reporting a little bit of softness in the market today. Let's take a look at some of the stocks on the move today. We can do that with Bloomberg's Matthew Griffin. Matthew, what are you looking at today?
Well, Paul, thanks for having me. I've been watching SanDisk. That's a stock that is prone to big moves. That's ticker SNDK. They're up about 7% after JP Morgan assigned the stock an overweight rating. They had previously suspended their rating on the stock, and it's the story that's been driving this data storage company all year, the explosive growth of the market for what's called NAND flash memory kind of data storage used in AI inference. And JP Morgan, the numbers they're citing are really explosive. They expect a $500 billion market for that technology next year. That's up from just $70 billion last year. And they say the structure of some of these deals, which come with financial guarantees for SanDisk to sell the technology, is going to benefit them as well. So that stock rising and building on a 14% rally yesterday after their investor day.
Pretty incredible move there. All right, let's switch it up to Reddit.
So some more optimism elsewhere in the broader tech complex. Reddit, the social media company, ticker RDDT, they're getting a boost after the announcement that they're going to join the S&P 500 index. That's prior to the beginning of trading on Tuesday. They're replacing Avalon Bay Communities, which is being acquired. And the announcement that's set to bring in passive buying for this stock, a huge amount of money is indexed to the S&P 500. Also some active managers that are benchmarked against it might consider buying the stock. And it's giving a bit of relief to Reddit, which is still down about 23% this year.
All right, one more.
I've also been watching a name called York Space System. That's ticker YSS, which is down about 12% after the satellite company slashed its revenue outlook for the year. They now see $375 million to $405 million, down from $545 million to $595 million. So a big cut there. Now, some of that is to do with the structure of their contracts. They say the government is kind of back-weighting how they assign contracts for some, military applications of the technology. So maybe they'll get that money eventually, just not this year. But I actually covered this IPO back in January, back when everyone was excited about aerospace and defense, and it's really slid since. Feels like they went public just a bit too late, maybe.
Okay, very good. Matthew, thanks so much. Appreciate it. Matthew Griffin, equities reporter for Bloomberg News. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. We got some U.S. retail sales earlier this morning, and the retail sales fell in July by the most in more than a year as consumers pulled back on purchases at online stores and auto dealers. Let's break down the retail numbers. We can do that with Mari Shore. She's a senior equity analyst at Columbia Threadneedle. Mari, what did you make of the retail sales print we got this morning?
Yes, thank you for having me. I think there is a lot of focus on the sequential slowdown, as you just mentioned, but I think that deceleration can be easily explained by two things. Number one was the Amazon Prime Day shift into June, which hurt spending in non-store retail. And then also on the auto side, as you said, we saw greater strength in that category earlier in the quarter ahead of anticipated tariff increases. And so that category slowdown makes sense to me. And I think when you put those two things aside and you look at the underlying strength in categories like general merchandise and apparel and health and wellness, we actually saw sequential increases there. So when I look at the underlying demand trends and the health of the consumer, and this has been further supported by commentary from some of the large banks, the outlook is very stable. And I think that the spending remains solid. But we've been talking for some time about the widening gap between winners and losers in retail, and that trend continues.
So that trend continues, and it kind of mirrors what's happening across the economy overall. We got data this week on consumer and wholesale inflation, and that showed that price increases are slowing. They're moderating a bit. Do you see evidence of that in this retail sales report?
Not quite yet in the retail sales report, but I do think that that is to come. As you said, in the inflation data, we did see an acceleration in some categories like consumer electronics, which are sensitive to what's happening with pricing in memory chips. But outside of that, a lot of the retailers have talked about their plans to use tariff refunds to reinvest in lower prices because they all acknowledge the importance of value in driving traffic and sales. So I would anticipate further disinflation in some of the general merchandise categories, but also on the food side as we move through the rest of this year.
Mari, what are the retailers saying about the consumer these days? How much promotion is needed to get the folks in the stores and buying? What's the overall sense of the consumer?
You know, we have seen some mixed data on the low-end consumer. Of course, that consumer is most sensitive to changes in gas prices, but some of the data that we've seen, like come out of the Bank of America credit card panel, shows actually improving spending and wage growth at the low end, which is a little bit of a head scratcher and honestly a trend that we have not seen for some time. On the other hand, the trend at the higher income level remains very solid. And so, you know, we have yet to hear from a lot of the big retailers, and especially some of the larger retailers and dollar stores exposed to the low end. But the credit card data would suggest pretty healthy spending from the dollar stores and Walmart, and most are expecting comp store sales growth in the 3-ish% range for those companies. So I think overall the outlook for the consumer is solid, but of course all the retailers acknowledge that the consumer is still very discerning and really focused on value and convenience.
All right, good stuff. Mari, really appreciate your joining us on this Retail Sales Day. Mari Shore is an analyst, senior equity analyst at Columbia Threadneedle Investments with a specialization in retailers. Let's stay on this theme of retailers and retail spending. Julia Fanzaris is our U.S. economy reporter, and she's picked up on a theme here, which is that U.S. consumers are increasingly willing to spend on hobbies, sporting goods, musical instruments, things that, you know, they feel is worth their quality time, even if it means sacrificing some savings along the way. Julia, there's data that backs this up, isn't there?
There's a lot of data that backs this up. It's even retail sales data that came out. So for the past couple months, this hobby, the hobby, sports goods, musical instruments, and crafts category has been one of the only resilient categories continuously increasing month over month and also year over year. It's also interesting that the amount that Americans are spending on hobbies as a share of their overall disposable income is at a record high, which is very fascinating. We've been hearing about these trends for a while, but seeing them translate, economists have now been keeping a close eye on them as a gauge of whether consumers still have that extra room to spend on what they want.
Yeah, it's not me on hobbies. I'm not doing the whole game thing or the hobbies. Who are these people?
Your hobby is the beach.
Yeah, exactly. Who are these people?
I have to say, these people are me. Okay. I bought a $200 sewing machine earlier this year. Really? And it's fascinating because this entire trend has actually spanned multiple generations. PNC credit card data shows that every single generation, their spending has grown on hobby trends. And the Michael CEO said the same thing to me yesterday when we were on the phone, that the fascinating part of this trend and the unusual part is it's not just Gen Z finding crafts being fun, but it is a bunch of different generations fueling this boom.
That is fascinating. And I guess a part of this is also an analog boom. So it speaks to this idea that people are turning away, actively turning away from being online, you know, doing things virtually and doing things more tactilely.
Yeah.
Right? Tactilely.
Tactilely, yeah.
People want to get back outside, and this happened with COVID, the desire to, okay, you need to get out there. So that's when the boom started, and people started getting back out there. They want to get back to crafts. They want to have connection with people. And I think there was a big conversation about third spaces, you know, where can you connect with other people? So people are also using this to find community. Some girls are going junk journaling, which is basically a scrapbooking class, and you go and you have stickers and you're sharing with everyone, but you're also making friends. multiple people are golfing with their coworkers as a way to spend time together. So that's what's really coming back into vogue.
Well, I guess anything to get people off the screen, I would think, would be a good thing for society.
We need
in
young
general.
people to do this, not necessarily, I mean, like
Everybody.
teenagers,
Yes.
preteens especially, right?
Yep. So I guess if I'm on Michael's stores, that's exactly what they do. I mean,
They're calling it the analog generation, the analog revolution, because they're actually trying to also create more in-people classes so that people can go to those. But I think it's also the older generation that wants to get off their phones. They're just as addicted to Facebook and YouTube as some of the younger ones.
Yeah, I've often observed that the biggest fans of YouTube are the retired and like, little kids who, when they're at a restaurant, you'd stick a phone in front of their faces. Like both cohorts are very, very much tied to YouTube. So Julia, what surprised you when you were doing the reporting on this story, the extent to which hobbies are really winning so much of the paycheck of Americans?
I think what really surprised me is that, yes, we've been hearing about these trends, but the lengths that people will go to continue spending on this was really fascinating. And the dollar amount, every single hobby with inflation data that's showing is the prices are going up for them. So people are spending $650 on, a golf club when they're not even a professional or even close to being a professional golfer. They just picked up the sport and they're pulling back in other ways. I spoke to someone who's spending more on friendship beads, but is paying for less cheese and fruits in her fridge.
wow, that's a trade-off.
Wow. Yeah, that's a trade-off.
Guns and butter, I understand, but beads and so I mean, we'll play it by ear there. Red headline crossing the Bloomberg terminal as we speak. Mangione to plead guilty to killing of healthcare CEO. So we'll have more reporting on that. Julia, thanks so much for joining us here with this interesting story, fun story. Julia Fenzeris, U.S. economy reporter, Bloomberg News, joining us live here in the studio. So that Mangione story, which I've been following because it was here in New York City, if for no other reason.
Yep.
And we were on air when all this happened. So that's interesting. I mean, I was surprised that we were even going towards a trial because they have this person on film committing the crime, but
there's very little doubt in terms of what happened, given that so much of it was is available publicly in terms of the video and all of that. He was expected to plead guilty, so this is nevertheless a huge red headline here. And again, Luigi Mangione will plead guilty to resolve federal charges related to the shooting of Brian Thompson, the United Health Group executive. This is according to Mangione's lawyer, who said this in court on Friday. He was facing 2 counts of stalking in connection with Thompson's death. This was back on December 4th, 2024. I guess what's kind of interesting about all this, Paul, is nevertheless, he's become kind of a folk hero online in some circles.
Really never understood.
Which is disturbing in so many ways, but
I can understand a negative attitude towards healthcare in general, and maybe a certain company in particular. The claim wasn't, but boy, to take it to that level was very, very disturbing. So we'll have more reporting on that story. Markets a little bit lower here this morning on a slow Friday trading environment. S&P down 11 points. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here. Bloomberg stocks lower across the board. This Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide, goldencrestmetals.com/guide. Luigi Mangione will plead guilty to resolve federal charges relating to the fatal shooting of United Health Group executive Brian Thompson. That, according to his lawyer, saying that this morning in court. Mangione appeared in New York federal court. He is facing 2 counts of stalking in connection with Thompson's death in Manhattan on December 4th of 2024. Stocks lower as Wall Street wraps up the week. Stocks are churning. Signs of a slowdown in the main engine of the economy are reinforcing bets that the Fed will hold rates steady to further prevent weakness. S&P today down 15, 77.83, drop there of 0.2%. Dow Industrials down 102, down 0.2%. NASDAQ down 120, a drop there of 0.5%. 2-year 4.14%, with the 10-year 4.68%, the 30-year 5.26%. Gold up $34 the ounce, 43.84, up 0.8%. West Texas Intermediate crude 81.68 a barrel, up 0.5%. I'm Charlie Pellet, Scarlett and Paul. That is a Bloomberg Business Flash.
Charlie Pell, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. As Charlie was just reporting, Luigi Mangione will plead guilty to resolve federal charges related to the fatal shooting of United Healthcare executive Brian Thompson. We're going to chat with June Grosso, Bloomberg's legal analyst, in just a moment to get the further details on that. But in a minute, in the midst of that, before that, let's focus on the muni business, because it's Friday, and that's what we do here. Focus on Munis is brought to you by BAM Mutual. Put America's strength to work in your portfolio with BAM Insured Municipal Bonds. Protect your investments with an added layer of security and guaranteed income. Invest with strength. Build a stronger tomorrow with BAM Mutual. Dan Close joins us. He's head of municipals for Nuveen, based out there in Chicago. Dan, talk to us about the municipal bond market. How's the performance been this year so far to date?
And thank you so much for having me on the show. July was a little bit rough. We had a great first half of the year. And July, we gave back a lot, about 185 basis points or so. But, I think what's been interesting to see is with U.S. Treasuries now backed up about 50 basis points on the year for the 10-year part. Munis are still up on the year. We're up about 125 basis points, outpacing the broader Bloomberg Ag, outpacing just about everything else in fixed income. So made a nice recovery so far in August, but July was a little bit tougher, but looking forward to the rest of the year. I think we're set up nicely.
So what are the technicals for the second half of the year, the rest of the year? What does demand look like? What does supply look like in particular?
Yeah, sure. Year to date, we've had 33 weeks or so of the year. 31 of those weeks, we've had positive inflows. So that's been very, very encouraging. We've had about 38 billion versus about 10 billion same period last year. So we're seeing a lot of issuance, but I think the really instructive part is we've had more bond calls, more bonds maturing, tender sinker than new issue. So we have this negative net supply that's been a nice tailwind, and we're really seeing a nice tailwind in August with about plus 20 billion or so of recycled money versus expected new issuance.
So give us a sense of duration here. How far out on the curve do you think you want to go here in the municipal market?
Yeah, right now, the municipal yield curve versus this time or so last year, we've seen a decent flattening, but we still think there's room to go. For investors who are comfortable going a little bit further out in the curve, that 18 to 22-year part we like in particular. The muni market has a lot of call provisions on their debt, so extending a couple years extra in maturity, especially if you're buying premium bonds, really doesn't add additional duration to your portfolio. So we really like that part of the curve. As well, we think the 10-year part has gotten beaten up enough that it bears looking at for those investors who are looking a little bit shorter.
And before we let you go, Dan, We know that a lot of states are targeting high earners with these income or wealth taxes. They want to, of course, fill their coffers. So that leads to demand for tax-exempt munis. Which states are you looking at? What are the prospects for, tax-exempt munis in those states?
Yeah, it started with with Massachusetts a couple years back, 2022. They put in a millionaire's tax, which was a 4% surcharge. From 23 to 25, they collected more than 2 times what they budgeted, and I think a lot of other states said, "Wow, that's a great idea. Let's see if we could do something similar." So, Maine put on a 2% surcharge for millionaires. Rhode Island put on a 3% surcharge. And what we're seeing right now is the state of Washington is going to enact a millionaire's tax in March, which they formerly did not have a income tax. They're proposing 9.9% to go into effect. And, for muni business, I could speak for Naveen, we've had enough inquiry and enough demand for state of Washington paper. We opened a new separately managed account strategy. So those states that are enacting these higher limits, we're certainly seeing a lot more activity. In a state like California that's trying to pass a billionaire's tax, we think that this momentum will continue.
Dan, thanks so much for joining us. Really appreciate it. Dan Close, head of municipals for Nuveen. Let's get back to this news story that just crossing the tape recently. Luigi Mangione will plead guilty to resolve federal charges related to the fatal shooting of United Health Group executive Brian Thompson. His lawyer said in court on Friday. To get some more color on that, we're pleased to welcome June Grasso. She is our legal analyst at Bloomberg here. June, I guess we started hearing about this last couple of days, but what do you think going on behind the scenes here?
That's hard to know because he's pleading guilty. He's in court now, and they're going through the allocution where the judge has to, find out if he's in the right state of mind, if he's doing this of his own accord, if he knows all his rights that he has, and that now he's giving up the right to a trial. So she's going through all that now. He's going to plead to both counts in federal court, both counts of stalking, which could carry a life sentence. And apparently the prosecution has said they're going to ask for that. So it's hard to know what went on behind the scenes. It appears that what's happening is the defense is taking a chance that the judge is not going to sentence him to life, because it's up to the judge finally, and that they can use that to try to block the New York trial, which on the basis of double jeopardy. And New York's double jeopardy law is stronger even than the federal law. So I can't tell why they're doing this. Perhaps the evidence is so strong against him that that there's no hope. They feel like there's no hope that he'll come out even with a trial where one juror, hangs up the trial. But it's hard to imagine because he's pleading guilty. That means that he's going to tell the judge exactly what happened. He's going to recite what he did. So that can be used against him in state court if that trial ever does go forward. So, it's hard for me to understand what's going on and why they took this drastic measure.
What's the timeline for his potentially facing trial for the New York charges?
Right, that would start in September, but I suppose that will be put off right now because there are going to be motions, to get rid of that trial because of, as I said, double jeopardy. And, his attorneys from the very beginning were arguing that this was double jeopardy. And it certainly seems like it because normally you have a murder in the middle of Manhattan. What are the federal authorities? Why are they bringing charges here? It really has nothing to do with the federal government. But at that time, Pam Bondi wanted to get the death penalty for him, and that's a federal case. So they brought this, and then the judge here the federal judge ruled that the death penalty, it wasn't death penalty eligible. So it put him in this bind where he had a state trial and a federal trial, and whatever happened, whatever was admitted in one would be admissible in the other. So it really put him in a bind, whereas maybe if there weren't any federal charges, he would go forward with the trial and take his chances that they might be able to hang up the jury.
What do you think the New York lawyers will do? Will they go ahead with the case, or will they just say, oh, wait, life in prison from the federal level, we're done?
I've read some stories that the New York DA is not all that happy about what's happening. He feels like they're being squeezed out of their trial.
Yeah.
So, I mean, you always want to protect your turf, I think, and this really is a Manhattan trial. It's not a federal trial. So I think that they'll probably fight to keep the trial, but that might be a losing battle.
All right, very good. June, thank you so much for coming in here and helping us out here with this story here. Let's get back to the markets here. A little bit of red on the screen, but it's a summer Friday, and it's kind of quiet and all kinds of things going out. There's certainly technology news here. Workday buyout would signal low AI risk. Anurag Rana joins us here. Anurag, talk to us about Workday. What's going on there?
So, Paul, if you remember, we came back and I think January, February timeframe when we did a big report saying that, you know, all software is not created equal. Everything was down 40, 50%, you know, at that time, just within a period of 1.5 months. And we had picked out SAP, Workday, Shopify, and ServiceNow as 4 vendors that are, you know, best in class in their own category of what they do. And we said, you know, these kinds of workflows are critical for an enterprise, and it's not going to be easy for a large language model to disrupt them. Now, at the same time, you know, what I say doesn't matter, but at the end of the day, if somebody wants to go take them private, I think that really, you know, is the real message, that if private equity wants to spend billions of dollars taking them private, then maybe there is value for a lot of these firms out there. And that's what we saw yesterday. There's some rumor out there that these guys may be taken private. And, you know, we think if that happens, that really changes the narrative in the software landscape, which has been under pressure for the last 2 years or so.
And to just follow up on that, Workday shares jumped after a Reuters report that private equity firm Silver Lake is in talks to purchase the software provider. And just puts context around that, Silver Lake, in my mind, is by far the #1 technology-focused private equity firm out there. Some of the smartest people. They've got a tremendous history of deal flow.
Yeah, it certainly sends a signal, perhaps, that SaaS apocalypse, whatever they were calling it, yes, you know, might be over as a result. So, Anurag, if this continues to be something where they're negotiating this, and Silver Lake, as Paul mentioned, you know, a big name, sending a message, what other companies might also be, you know, being eyed for acquisitions?
So we had mentioned some of the others, but they're too large. I mean, just, you know, frankly speaking, some of the, you know, ones we talked about, SAP is just too big for anybody to take private. But what it does is you just need to be honest, take care of one of them. The rest of the industry will come out, because right now investors just don't want to be in the software space. The only space for them is to just go buy memory or AI infrastructure or chips and leave everything else aside. And, you know, it's not good for the software industry, mostly because it's a very people-centric industry. So if the valuation keeps on depressed, yep, you know, all these employees will go out, leave, and then go to the model companies. And so you know, this is just a good sign for everybody, frankly.
Anurag, thanks so much. Appreciate it. Anurag Rana, Senior Technology Analyst for Bloomberg Intelligence. And again, some of the software names we saw sell off recently as people thought the AI risk to these things was material. I felt like a lot of people telling us baby with the bathwater type of situation.
I mean, that's usually the case, right?
Yeah.
People panic, and then they're just like, anything that smells like it or looks like it, get rid of it.
And here we go, some smart money maybe coming in and trying to find some value. Pretty interesting there. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. We are Wall Street wrapping up the week. Stocks declining, signs of a slowdown in the economy, reinforcing bets that the Fed will hold rates steady. The S&P currently at 77.81. We are down 17 points now, down by about 0.2%. Dow Industrials down 104, down 0.2%. S&P, by the way, retreating from a record. NASDAQ down 0.5%. The NASDAQ 100 index also down 0.5%. But the Russell 2000 index of small cap shares, it is gaining 0.2%. The 2-year 4.15%, the 10-year 4.68%, the 30-year 5.26%. Gold, meanwhile, at 43.87 the ounce, up 0.9%. A gain for West Texas Intermediate crude heading into the weekend, up 0.5%, 81.69 a barrel. Brent crude 87.88 barrel of Brent, up by about 0.9%. Applied Materials after earnings down now by 5.7%. As for the broader earnings backdrop, Megan Horniman is with Verdance Capital Advisors. She was a guest this morning right here on Bloomberg Intelligence.
I mean, nobody can say that second quarter earnings weren't amazing. But if you go forward, what investors are starting to get concerned about is how long can this pace of earnings growth keep up? We are concerned that it continues to be upgraded, and there might be some the chance here that we'll see some of these earnings be downgraded, not only for the second half of this year as we move into those earnings seasons, but then into 2027 as well.
Megan Horniman of Verdance Capital Advisors, interviewed right here on Bloomberg Intelligence. Reddit shares, they are surging by 14% now. It is joining the S&P 500 next week, all part of an off-cycle change. That word from S&P Dow Jones Indices. Again, Reddit up now by 14%. I'm Charlie Pellet, Scarlett and Paul. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. We appreciate it. Scarlett Fu and Paul Sweeney, we are both live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well here. Let's check in with folks that are actually doing this stuff for a living. Chuck Lieberman is one of them. He's the co-founder and chief investment officer at Advisors Capital Management, joining us from Ridgewood, New Jersey, one of my favorite golf courses there. They love me there. Chuck, thanks so much for joining us here. What's the conversation you're having with your clients these days? They're having a pretty good year in the stock market. They're clipping some pretty nice coupons with their bond portfolio. What's the conversation like?
Well, one very common conversation or question that's asked is, should they take some money off the table given the run-up in stock prices? And we tell them no. We think the economy's in good shape. Corporate profits have really had a spectacular quarter. Earnings estimates are being revised upward, not downward. Business is good. So we think the valuation of the market is fine, and the outlook is very positive. So we're still very positive on the outlook.
The market is not the economy, but it's not divorced from it either. So I'm curious, when you look at the data on retail sales, for instance, and consumer confidence, in what specific ways does the booming stock market reflect what's happening in the economy, the real economy?
Well, the most critical way, Scarlett, is profitability. Corporate profits have set record highs. They're doing extremely well. Stocks have done well, but stocks have gone up less than corporate profits. Corporate profits have increased more. So valuations, excuse me, have actually improved. And the outlook is very positive. So that's the solid basis. And it's based on the solid performance of the economy itself.
Chuck, the AI trade has been permeating the markets as it seems to be permeating all parts of our lives these days. How are you kind of thinking about it in the context of your portfolio construction? How are you playing AI these days?
Well, there are a lot of ways to play it. And part of it, the problem is you're exactly right, Paul. It's dominating conversations, but there are a lot of direct plays and there are a lot of indirect plays. And we have to think about the consequences of AI because it has an impact, sometimes positive and sometimes negative, on different holdings. We are looking for opportunities to benefit from it. So we have more exposure for example, to utilities, than ever before. We have exposure to various plays in the hardware space, some in the software space, and we look at who's benefiting. So, for example, in the case of banks, we expect them to bring their cost of operations down as they take advantage of AI.
It feels like the stock market has made peace with this on-again, off-again war in Iran. It fluctuates with oil prices when oil prices see big swings, but beyond that, everyone's focused on profitability, the fundamentals of those. When or what could happen in the Middle East that could get investors focused on it once again, that could prove to be disruptive in a more meaningful way?
Well, I would bet very strongly that it'll be disruptive again. I don't think that Iran is going to be interested in a peace deal unless it can get one on its terms, and that's unacceptable to our president, who wants a deal on his terms. So I think we're in an unstable equilibrium with respect to Iran. And it's hard to know how we break out of that. We just announced that we're going to impose more financial sanctions on Iran. But is that going to elicit some sort of response from them? Or are they going to become more aggressive in trying to clamp down on the Strait of Hormuz? It's entirely possible, and I wouldn't rule out the possibility of more kinetic action. It remains to be seen. And of course, Iran is very well aware that we've got an election coming up in a couple of months, and they're going to try to put as much pressure on the president as possible before then. And I'm sure Trump is going to try to hold off and put pressure, economic pressure on Iran, and wait for other activities or actions that he could take until after the election.
Chuck, how about on the fixed income side of the ledger here? How are you playing the bond market these days?
So I'm still kind of cautious. I think that bonds are going to benefit from near-term data suggesting that inflation is modestly moderating. The improvements are small. We've got a long ways to go. And that's reflected in the fact that a lot of FOMC members are not happy with the current rate of inflation and think rates need to move higher. But I think they'll give it time. I think they'll wait, hope that inflation moderates more. And if it does, then they won't have to act. But I think before the end of the year, after the election, I think there'll be enough evidence of the tightening of the labor market. I think that's the crucial part. The labor market is getting tighter, and so wage rates might rise more. And that's a problem for inflation. So I think we're in a wait and see period that makes me comfortable holding intermediates and short-term maturities, less comfortable with long maturities. And I think ultimately rates do move higher.
And a lot of volatility along the way, especially at the long end of the yield curve?
There's always volatility in the bond market, especially the long end. Anytime anything happens with respect to Iran, that's going to move the market, both the stock market and the bond market. We respond excessively to every economic news report. People don't take a longer-term perspective, which is unfortunate, so they move their portfolios around excessively. I think the underlying trends for the economy are positive. The labor market continues to improve or gets tighter. It doesn't take much hiring to reduce the unemployment rate, as we've seen. And so I think the labor market does get tighter. And I think that's a problem for inflation down the road and the Fed's objective of trying to get to 2%.
Chuck, thanks so much for joining us. Always appreciate getting a few minutes of your time. Chuck Lieberman, he's the co-founder and he's the Chief Investment Officer at Advisors Capital Management, giving us his thoughts there. What I love about Chuck's resume, he's been everywhere on Wall Street, including some of these great old banks that no longer exist, like Manufacturers Hanover Trust.
Chemical Bank.
Chemical Bank, exactly. And where I used to hang my shingle at the Chase Manhattan Bank there. So
well, that kind of exists in a different form,
does.
Right?
Yeah, so I count JP Morgan as one of my, as I'm an alum there. So, but we were down there, One Chase Plaza downtown back in the day. We got some red on the screen here. S&P is off 18 points. That's 0.25%, but on relatively light volume because it is a Friday in August.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Broker studio in New York City. We are streaming live on YouTube and streaming live at Bloomberg.com as well. Pet owners are spending money on experimental treatments they believe will help their pets live better and longer lives, including peptide injections, red light therapy, and nutritional supplements. That is the subject of our big take story today on the Bloomberg Terminal. Anna Edney joins us, national healthcare reporter for Bloomberg News. Anna, talk to us about, we know that pet owners spend a lot of money on their pets, but this is something else. Tell us what's going on.
Hey, yeah, we do know that there's a lot of spending going on for pet owners, but one of the things that we talk to people about is kind of outside that traditional, food, vet care, things like that. These are people who are going above and beyond to, try to make their pets live longer, if possible. And they're looking into some of the things that a lot of humans are doing as well. Biohacking is pretty popular these days. And so it's peptides. There's a longevity drug called rapamycin that's experimental in this space. Also red light therapy that we heard about from owners. And they're just trying to cobble together all these different ways of keeping their pets with them as long as they can.
Any evidence that any of this works, or is, how do we see that, I guess?
Yeah, I think that's the $1 million question. And like I said, a lot of this is experimental. So these are people kind of taking a chance, something that vets normally caution against. But what is happening is there are some clinical trials. So there's a company called Loyal that is a startup, and they're trying to come up with a longevity drug that they can get conditional approval from the Food and Drug Administration on. They're testing that now. There is the Dog Aging Project. I talked to their chief veterinary officer, and she told me that they're studying this drug called rapamycin. It is something approved for use in humans, but for very specific use. It's to help transplant patients not reject that organ. In smaller doses, there's thoughts that it might work to improve lifespan. And so they're testing that on dogs. They're enrolling a clinical trial now to see what they might be able to find. That's based on some promising mouse data, but we just don't know yet if any of this actually works.
Every time I see this figure, it just blows my mind. U.S. pet spending expected to hit a record $165 billion this year. That's extraordinary. But this pet supplement market, is that a growing part of that overall big pet spending market?
Yes, the pet supplement market is a big one. I talked to someone who does research in a lot of this, and she's seeing even the pet supplement market not just growing, but recognizing this trend where people are looking not just for to treat aging issues, but they want to go a step further. They want to go into longevity. And so she's seeing some of the labels change over time more and more to say, instead of, this is for a senior dog, it's now talking about longevity for a pet so that they can live longer. Certainly the supplements are a huge part of this industry.
What's the veterinary community saying about this? Do they support some of these things, or are they saying, hey, we think this may be going a little too far?
I think there's caution for sure. The Dog Aging Project is very much run by veterinarians, the ones who are testing this, some of this stuff. But overall, they say, like, we don't know yet. We're testing it because we don't know, and so. They're sort of the veterinary association says to be careful when thinking about this. They don't come out right and say, just don't do any of this. I mean, a lot of people are doing it for themselves as well, but they do say that, when it's an unproven drug, it can cause problems. And I talked to a vet who said that they see supplements causing problems often in pets. They're coming into the vet's office and they're having issues, they're sick, and it's actually the supplements that are causing it sometimes. So they want to get pet owners to stop the supplements before they really try to go diagnose something else, because often that's the problem.
All right, Anna, thank you so much. Appreciate this. This is the Big Take story, folks. It gets a ton of readership. It's deeply researched and deeply sourced. Some great stuff, some cool videos of some very cute pets embedded into this story. So check it out. You can read this story, more of the Bloomberg Big Take stories on the Bloomberg terminal and at Bloomberg.com/Big Take. That's Anna Edney, National Health Care Reporter for Bloomberg News. She's down there in beautiful, lovely Charlottesville, Virginia. All right, that's it here for this Friday. I'm sorry, it's Friday. We are done, folks. Looking at the market here as we close out the morning trading session, pretty quiet, as you would expect for a Friday in August. The S&P is down about 15 points. The Dow's down 140 points, and the NASDAQ is down 108 points. Pretty quiet out there. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only digital global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. And stay tuned now for a special edition of Bloomberg Money. That is coming up in just moments. Looking at the crude oil market, got a pretty quiet here this morning, up 40 cents for WTI crude oil, just under $82 per barrel. Right now, stay tuned for a special edition of Bloomberg Money.
Bloomberg Money.
Good noon, everyone. Bloomberg Money, personal finance, retirement, some say wealth management. It's a Friday in the summer, at the doldrums of August. But Scarlett and I, we pieced it together today. I think it's going to be an interesting 1 hour here. And we bounce off a negative statistic on American consumption. Retail sales today
fell unexpectedly. I thought we were all spending happily this summer.
I think some are, but too many aren't. That'll be one of our real themes today, to say the least. It's been an odd week, don't you think?
Yeah, it's absolutely been an odd week. And we should thank, by the way, our radio listeners for joining us as well. This is a new Bloomberg Money in which our radio listeners join for the first time.
We're going to get to Joe Matthew in a moment. We welcome all of you. It's a simulcast for you worldwide, of course, on television, on radio. Good morning, specifically 92.9 FM in Boston, but Sirius and all the other ways you discover us every day across television and radio. We welcome all of you. An important conversation. Mike Wilson will be with us of Morgan Stanley, their chief equity strategist, away from like the mathiness here, but Mike Wilson on where are we going on a rate of return out within our retirement planning. Scarlett?
Also joining us is Kristen Bitterly. She is head of Citi Global Wealth at Work. We're going to talk about the research she has done into people living longer and maintaining their financial health.
They're all thinking about it, but she's full-time. She's like full-time retirement
This is the theme
analysis.
that goes into everything she says and does. I mean, it's about longevity and it's about planning for that.
Especially on the backside after Field of Dreams last night, we will address baseball, as you can do in August. Right now, we address the stock market moving the wrong way. Futures earlier, a bit green, but right now, some red on the screen. But the VIX, I'm sorry, Scarlett, the VIX is really, really important. It's a bull market VIX, even with all the indeterminate news into the weekend.
Very tame. The S&P 500 still set to close up for a third straight week, albeit just modestly, and that's thanks to a rebound in tech this week. We look at yields, they're higher across the curve. Of course, data this week showed inflation cooling.
I missed this.
Yeah.
They're higher.
It's a cross-asset data check. And yeah, the 10-year yield up 4 basis points.
The dollar not doing that much, off by 0.4%, and crude oil holding in the low 80s range. WTI at $81.60 a barrel.
I mean, that's why I'm with Scarlett, folks. I completely missed this 30-year bond of 5.27. How about that 7% 30-year mortgage rate?
Yeah, well, that's not gonna come
We're
down
not there
anytime
yet.
soon. Yeah.
But there it is. I mean, yields up here today, and we'll have to see on that. We start strong. This has become hugely successful for us. Different voices from Bloomberg News with us this morning. Isabel Lee is with us. We're thrilled that she could join, and Lily's with us as well here. Thank you so much for joining. But Joe Matthew is with us here as he looks to radio and television following on here with Balance of Power as well. To me, the arch theme and lessons learned of this week, but for everyone riveted in the nation by affordability, is going to be the turnout on the elections, plural, to come. Do you have any visibility on the turnout of the midterms in November?
Well, we have conventional wisdom, which is that the energy is with the Democrats. The question is, are they running for something, or are they simply running against Donald Trump? And that's going to help to animate that turnout as to what in the world it is that he says at the last minute here, because even look at Texas, where you saw Democrats turning out ahead of Republicans in primary elections. We're going to be in Florida on Tuesday. That's a little bit less significant in this particular conversation. But where's the price of gas on Election Day? We're above $4 a gallon right now. We're at $4.14 here in New York, and I checked that today because the president is going to Garden City. You know Garden City. Sure. It's only 18 miles from here, and it bears no resemblance to this city. He'll be surrounded by first responders, and he's not going to be talking about affordability. He's talking about crime.
In Garden City, he's resounded by people that own a BMW and a Mercedes in the garage. The Republicans can't win with that audience, can they?
Well, so why is he going there is a big question today, because the affordability argument has not been landing. He calls it a Democratic hoax. You're looking at the data, Tom. You know better.
Well, we're looking at the data, and the data show that retail sales for the month of July fell unexpectedly. Lily Meyer, you cover specialty retailers for Bloomberg News, and you cover a lot of the big aspirational brands. Does what you see in this retail sales report mesh with what you've been reporting on when it comes to these specific companies?
Yeah, so we reported just a few weeks ago that Under Armour saw softness in trends, and we've been seeing, kind of a mixed consumer picture over the last few months. Many of the retailers still are yet to report, so it'll be really interesting to hear if they say a similar thing and are seeing softness. But yes, Under Armour said they were seeing softer demand, so I'm curious to see what other retailers will say and if they echo that.
Absolutely, and I'm wondering as well, as we see this K-shaped economy, the divide growing ever wider. You've also been reporting on how even when it comes to people's hobbies, those that can afford it are splurging big time. The running culture, for instance, has gone way upscale.
Yeah, we wrote a story about, high-end running spending. So, instead of shopping at places that are a little bit more affordable, like your Nikes, your Adidas, shoppers are buying $350 running shorts.
Okay, the world's different. When you were at Bates College, it was a road trip of 25 miles to go to Freeport, Maine, to go to LL Bean drunk at 2 a.m. in the morning. Whoa. Don't tell me you've never done that. 24 hours. Okay, it's like 24 miles, over you go, shopping, power shopping, 2 a.m. in the morning. That retail day is gone, isn't it? Everybody wants to go fancy now.
Yeah, it's a totally different retail scene, and I think running is a really good example. People are spending wild amounts of money to sweat in these items, and a $450 running vest or a $150 t-shirt that has holes in it, so people want items.
What Joe and I knew was a $14 sweatshirt. That's right. From LSU, from Filene's basement.
And a Bert and I record from LLB.
Exactly.
Isabel, let me bring you into this conversation, because what you've been writing about is as folks are spending $350 on Nike mesh shorts or perhaps higher brands, you have a lot of wealth advisors and influencers using social media to really talk up how the wealthy, the rich, are saving a lot of money on taxes. And that's something that ordinary people are basically eating up.
Ordinary people, maybe because they want to buy $100 Lululemon pants when they go to their yoga classes, they want more money in their pocket. So tax alpha, that's a strategy used for usually reserved for the ultra-high net worth and hedge funds. Basically, think of tax alpha as maximizing your after-tax returns, not your pre-taxes. If someone tells me they're making $500,000 a year, I'm like, but how much of that
Am I singeing you with the steam coming out of my ears? We're managing money to make losses?
That's what some people do. So now these strategies are being marketed to retail investors in TikTok and YouTube and on Instagram, and retail investors are eating this up. Some firms are lowering as much as as little as $1,000, but you have some people saying that it's not worth it unless you have $1 million.
Put the Bloomberg money cork in my mouth.
I know, well, because you do manufacture losses so that you will have more take-home pay.
But, this whole strategy ties people ever closer to their wealth advisors because these are not easy strategies. These are complicated strategies.
They're very complex strategies. Some include shorting stocks. Some include borrowing money because you have to, again, manufacture the losses. And this is a story done by my great colleagues, Charlie Wells and Denitza Tekova. And we talked to some people, and some of them are really into it, but some are like, no, it's not worth it if you don't have $1 million at the very least.
I come back to the idea that it really is about inflation for, whether you're at the top of the income spectrum or the bottom of the income spectrum. And Joe, we had data this week that showed inflation slowed, but it's still above 3%. We know cost of living is top of mind for voters. I'm not sure where it ranks for the president, who's obviously trying to end the war in Iran and wants a perpetrator for what's going on with the reflecting pool. Is it a priority for the rest of the Republican Party?
It's a huge priority. Yeah, we're going to talk to Mike Flood later on. Main Street Caucus, Nebraska. It's the only thing he's worried about. He's hoping I'll ask him about the housing bill that they got passed. The president refused to sign. There's a massive disconnect here as the president suggests that affordability is a Democratic hoax and has previously said that they won on affordability. The part I don't get is after that tape this week, we didn't hear anything from the president. There was no victory lap. There wasn't even a boring statement from the communications office. So you almost get the sense that the White House has stopped caring about it.
I've got to ask, because it's such news front and center, and that is the war in the Eastern Mediterranean. Joe, you and Kayla are just hardwired into this. Should we expect news this weekend?
No. I am getting a little bored of the let's wake up Monday and see if we're back at war routine. There's a reluctance to go long into the weekend because you're asking me about this, Tom, but the president says we're easing back. We're low-keying it. And this looks like it's going to be a long-term economic strangle as opposed to a kinetic military
Can we rip up the script? We get lucky here?
Yeah, please.
Okay, Joe Matthew, of course, foundational with David Brudnoy. In Boston, the Fenway Sports Group of Boston announces they're unloading Liverpool in some form. Will that money go directly to save the middle relief of the Boston Red Sox?
Well, I'm sure that you would like to see that.
I would like to see that.
I'm not sure David Brudnoy would have done that with the money, though. Can't you do something better in Massachusetts with the bottom of the K?
We'll have to see it. It's a sale. Bezos picks up a hunk of British soccer.
Yeah, Bezos adds another brand.
Where's John Farrow to make me smarter? I have no idea what I'm talking about here.
You know what a hot dog costs at Fenway Park right now?
I don't know.
$6.50.
What's a hot dog cost at Costco, Lily?
That's a good question.
It's like $1.
$1.50. They've never changed it. That's true.
Yeah,
there we go. This has been wonderful. Thank you, Joe Matthew, of course, Lily Meyer as well. And Isabel Lee also writing up an important article on TikTok. Coming up, an important conversation. Mike Wilson, you know him for his acuity at Morgan Stanley.
All right, from Bloomberg Money to Bloomberg Balance of Power here on radio, Joe Matthew is going to make his way from the presence of Tom Keene and Scarlett Fu into our studio in Bloomberg's New York headquarters, and join me as we break down some more stories in politics and geopolitics. As Joe was just telling Scarlett and Tom, the president isn't going to be focused on affordability as he makes tracks to Long Island later this afternoon. He's going to be talking about crime. But of course, it is affordability issues that are still front and center in this midterm cycle, being shaped by geopolitics as well. We have some news on that front as the Treasury Secretary is promising unprecedented economic isolation to bring Iran to bear. And we'll get the details about that from Bloomberg's Tyler Kendall live at the White House in just a minute. But first, we begin with a check on these markets, how they're reacting to today's retail sales figures. And for that, we turn to Charlie Pellet in New York. Hey, Charlie.
Hi, thank you very much, Kayla. The lines indeed lower across the board right now with the Dow, the S&P, NASDAQ. We're all very much in the red. S&P looking at a loss now of 14 points, down by about 0.2%. Dow Industrials lower by 143. That is a decline of just about 0.3%. NASDAQ down 106, a decline there of 0.4%. The 2-year, 4.14%. The 10-year, 4.68%. The 30-year, 5.26%. Spot gold, meanwhile, up $39 the ounce, up 0.9%, $43.89 on the precious metal. West Texas Intermediate crude also gaining as we head into the weekend, 81.66 a barrel, up by about 0.5%. Economic news. Among the reports out today, consumer sentiment, as measured by the University of Michigan, fell for the first time in 3 months as households worried about worsening business conditions and rising inflation. But what about the breakdown among political lines? Joanne Shu is Director of Surveys of Consumers at the University of Michigan.
Democrats had lower sentiment than last month, independents, and as did Republicans, who were actually the ones who exhibited the largest decrease between last month and this month. And in fact, Republicans right now are at their lowest levels of sentiment since the last presidential election. So really, this is a pretty broad-based decrease in this early month reading in August.
Joanne Shu of the University of Michigan, interviewed on Bloomberg Intelligence. Coming up next week, we got earnings from Walmart and Target, among many others. Walmart shares down now by 0.3%. Target today trading lower by 0.4%. I'm Charlie Pellet, and that, Kaylee Lines, is a Bloomberg Business Flash.
All right, Charlie Pellet on the markets for us. Thank you so much. As I keep an eye here on the Bloomberg terminal, we get an update from Central Command, which has just posted on Twitter that 62 commercial vessels have now been redirected in the Strait of Hormuz as part of the United States' ongoing blockade on Iran. 62 vessels, a blockade that has been in place for months now, although there was a brief hiatus during the short-lived period of the Memorandum of Understanding. And perhaps even more blockading could be in the offing, or greater sanctions on Iran, as the Treasury Secretary, Joe Matthew, is promising unprecedented economic isolation for Iran that could be unveiled next week.
Yeah, watch this space, he says. Kaylee, kind of interesting as we consider the analysis that we already talked about from Bloomberg Economics, the idea of sanctions suddenly working after 47 years of, yes, creating terrible economic conditions, but not moving the regime in its behavior is curious right now. It does raise the idea that the administration is acknowledging the fact that there is not a military solution here.
Yeah, it seems to be an economic focus that they are shifting to instead, although we have seen things oscillate quite a bit. So as we look for what exactly could be a part of this economic isolation plan, we turn to Bloomberg Washington correspondent Tyler Kendall, who is live on the North Lawn of the White House. Tyler, what more economic isolation aside from sanctions and the blockade could be in the offing?
Well, Kaylee, we're going to have to wait and see what sort of details we can glean from the administration. The U.S. Treasury Secretary Scott Bessent went on to say that it's going to be a, quote, 1-2 punch. You're going to have this economic pressure, as well as the U.S. maintaining its naval blockade, as we get this update coming down the wire from CENTCOM. The backdrop here, which Joe just alluded to, is that we know that Iran's economy has been squeezed significantly during this conflict. The IMF back in April said that it was expecting Iran's economy to shrink by 6.1% this year, and recent central bank data shows that year-over-year inflation is reaching 77%. The context being, as our analysts at Bloomberg Economics have pointed out, Iran has already weathered waves of sanctions, and when the country was given financial relief in part earlier this year, it wasn't enough to maintain that ceasefire. So that leads to questions on what sort of levers the administration can pull. One of the ideas that's been put out there is that we could see the U.S. do more targeting against Chinese refiners who are importing Iranian crude, but that in and of itself would present risks to the U.S.-China trade relationship, as we are getting about a month away from Xi Jinping's visit here to Washington, though we did see the administration yesterday take some moves with drone tariffs that were seen as being targeted against Beijing. I did want to put something on both of your radars, Joe and Kaylee. We got a new statement this morning from Iran's Supreme National Council, which did confirm that Iran is in talks with Oman about what it would look like to reopen the strait. But importantly, in this statement, the official says that whatever agreement they reach with Oman, that does not mean that we could necessarily see a full reopening when it comes to the waterway.
Hey, Tyler, just quickly, we've got about a minute left. The president's on his way to Garden City today. He's going to Long Island. And apparently he's going to be speaking. We just got into this with Tom Keene in our simulcast at the top of the hour. He's going to be speaking about anti-crime efforts. Is he turning away from affordability as an issue?
Well, Joe, for this moment, it does appear that way. I was listening to your conversation as well. This is also an area where President Trump has historically done well with in terms of the base of voters there. Crime is an area where Republicans are typically polling better when it comes to the Democratic Party, as recent polling is showing us that the trend is the GOP is falling behind when it comes to voter trust in handling the economy, an issue that the party has really been leading on historically, at least. We'll see if President Trump unveils anything new. His NEC director, Kevin Hassett, said they will talk about new economic policies. Not sure what they'll say about crime.
Well, we'll have a lot more to learn, and we'll be listening when he starts talking a little bit later on this afternoon. I am surrounded by so many great people in the noon hour. My heart is exploding. Alongside Kaylee Lyons in Washington, I'm Joe Matthew. This is Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow, the S&P, NASDAQ all in the red. Stocks are falling as signs of a slowdown in the economy. Reinforced bets that the Fed will hold rates steady. Our Michael McKee will have a whole lot more on the day's economic data for you coming up in just a moment right here on Balance of Power. S&P at 77.88, down now by 10 points. That is a drop of just about 0.1%. You run the GIP screen on the Bloomberg. We are off session lows, but still looking at a loss there of 0.1%. The Dow again down 0.2. We've got NASDAQ lower now by 0.3%, but the Russell 2000 index of small cap shares is advancing, up now by 0.4%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, trading lower by 0.9%, and the VIX, Wall Street's so-called fear gauge, holding just above 14. The 2-year 4.14%, the 10-year 4.68%, the 30-year 5.26%. Gold up $41 the ounce to $43.91, up by 1%. West Texas Intermediate crude ahead of the weekend, 81.81 a barrel, up 0.7. Brent 87.93, up by 1%. Tesla shares swinging between gains and losses, right now up under 0.1%. The EV maker said to be planning to unveil a new roadster design with, quote, flying capabilities as soon as this month. That according to the information citing 3 sources. So Tesla shares little changed and higher among other air mobility makers. Today we're looking at Joby Aviation down by 3%. Archer Aviation down now by 4.8%. Joe and Kaylee, that is a Bloomberg Business Flash.
So we're getting flying cars?
As if you got Elon Musk involved, the question is, would you get in one? Would you like to ride in one?
Yeah, I guess so.
Me too, in a heartbeat. In a heartbeat.
Charlie, I can't get Kaylee Lyons in a Waymo. If that thing took off and started flying around. No, you're right, Kaylee, no. What about these Joby things? The VTOL, they're going to be flying around.
VTOLs, absolutely.
Should you get in one of those?
In a heartbeat. Sign me up tomorrow. I would love to do that without a doubt.
About any of this, Kaylee. I'm going to take the train home, is all I know. Charlie Pallett will be back in just about 20 minutes' time with another read on the markets. Thank you, Charlie. It's great to be in your space once again. We're live at World Headquarters in New York. If you've been with us since the top of the hour, it's a little different today. You don't always hear Tom Keene's voice. And I want to just say to Bloomberg's Matt Miller, we see you. We're going to be fine. We're rounding the bend together here on hour 1 of Balance of Power. Kaylee, you saw consumer sentiment this morning. It's down again.
Yeah, consumer sentiment down, inflation expectations over the next year ticking up slightly, and perhaps you're seeing that kind of deterioration in demand in the face of price pressures in retail sales as well, because that also was not a great print. Month on month, down 0.6%. We haven't seen a reading that poor going back a year, Joe.
Yep, that's right. The most since 2025. Making you wonder exactly where we are here. When it comes to consumer sentiment, there are some political implications here, so we thought we would get into it with Michael McKee. Once again at my side at World Headquarters in New York, our international economics and policy correspondent. How are you reading these numbers with energy prices in mind, Mike?
Well, the first thing I thought of, and this is a question for you two, who are political reporters today, and I'm an old White House reporter, who said, happy campers you are, happy campers you will remain?
I don't know.
Because my first thought when I saw these numbers is unhappy campers you are. That was Dan Quayle when he was vice president.
Dan Quayle came up with happy campers?
In American Samoa. And that's what he said to the Samoans, happy campers you are. And of course, Dan Quayle.
In the American
that didn't
lexicon.
go over well in American
Samoa is an important place in this building.
But unhappy campers, that's the American story right now with the confidence and sentiment numbers, basically, because gas prices went up again and the war's not over, and basically we're kind of back where we were before June. So now people are reflecting that. The biggest drop in the sentiment index came from Republicans, though. So if you're looking at things coming up in November, you might be a little worried if you were Republicans, because this is now starting to really show through into the sentiment numbers.
Yeah, it's pretty incredible. In July, the reading for Republicans was 88.2. August reading 78.7. We're talking nearly a 10-point drop there. Independents dropped as well, and perhaps no surprise, Democrats have deteriorated too. And it's one thing for consumers to say they're not feeling great about the economy. It's another thing for their spending to actually showcase that. So what should we make of the deterioration in retail sales, Mike?
I wouldn't make too much of it, and this is not a political thing, but remember, the consumer sentiment numbers are for August, but the retail sales numbers are for July. And what happened in July? We saw gasoline prices go down after the Memorandum of Understanding. So that meant that gas stations sold less. This is all denominated in dollars, so they sold less dollars worth of gasoline. And that pushed down on the number, as well as cars. And there's a seasonal effect there that's not easily explained with this, but basically, if you look at it in a non-seasonally adjusted way, those auto sales at dealers were higher in July than they were in June. So it's kind of a weird thing. But the biggest thing there was Prime Day. Prime Day moved from July to June. And so we saw a 2.2% decline, huge decline in non-store retail sales because everybody spent their money in June and not in July. So all three things there are not going to repeat in September or in August. We get the news in September on retail sales. And so I think you're going to see a rebound there.
Retail is confounding to me when you consider the K-shaped economy and you see companies, luxury retailers, Williams-Sonoma at an all-time high, Simon Properties, which owns the nice malls, doing really well. How do we have both all at once? Is it the K?
Well, it could be the K, despite what Scott Besson says. We should know more next week because we get Target and Walmart earnings, and they're obviously appeal to the lower income consumer. The thing about the wealthy is that they can spend because their money's coming largely from interest and dividends. So they're getting their money from the stock market, which, as you pointed out, keeps going up. People who live paycheck to paycheck, they're starting to fall behind inflation. And so we should see a deterioration there. It isn't clear that we will, but because everybody likes to shop no matter how much money you have. So we're going to have to watch that, but the K-shaped thing has been a real thing, and we'll see if it still continues.
All right, Bloomberg's Mike McKee in New York with Joe Matthew. I'm here in Washington. It would be nice to be with both of you, and nice to be with Mike Regan as well, because he is also in New York as we turn to how the markets are interpreting all of this data. Mike, of course, is Bloomberg News managing editor for U.S. stocks. And we're coming off of record highs here today, Mike. Should we blame the data, or is this just a cooling off as once again kind of a bubble conversation resurfaces?
Yeah, I think a little of both, probably. I mean, we did see this knee-jerk reaction to the retail sales data, but then I think everyone realized all the caveats that Mike just described, especially that Prime Day going in a different month, going in June instead of July. But those Michigan numbers were very startling. I mean, that level of consumer confidence is about as low as it's ever been in this report. I think there were only like 2 months prior to this year when it was actually lower than that. So it's even lower than it was in the global financial crisis, lower than it was at the worst of COVID. So it's really kind of alarming to see it that depressed. And I would also say that the inflation expectation component of it caught some eyes too. The one-year inflation expectations at 4.3% ticked up from the prior month and above economist estimates. So that said, to your point, look, we are coming off a rip-roaring rally here from sitting at record highs yesterday. Looking at the S&P, it's up about 4% in August already. The NASDAQ up about 5%. So I wouldn't make too much out of the one-day price action, but certainly I think the data this morning did give people, a pause and some time to sort of take a little profits and reassess today.
Can I say, hey, we finally get to meet. This is great. Mike Regan, Kaylee, can you believe it, in the same room? I want to ask you about Bubble Land. Yeah. That's what I woke up to on the terminal this morning. Citigroup and B of A already mapping out bubble strategies and pointing specifically to the SOX, the Philadelphia Semiconductor Index. Bubble Land, after it rose over 2 standard deviations above its long-term trend. I'm starting to sound like Tom Keene. They found that in previous such instances, 2000 and 2020, index wiped out 43% and 23% respectively when the bubble popped.
Yeah.
How do we know if this is any different?
Yeah, so we've already seen that semiconductor index come down dramatically.
It's getting back up there.
Yeah, it's back up now, still about 15% off its peak. So definitely some froth removed from there. It's such an unusual environment, though, to describe it as a bubble, because those earnings estimates keep going up and up and up with this AI build out. So the risk really is that, that does not continue, that the AI trade falters to some degree. And, we're coming off this just fantastic earnings season of 30% earnings growth. But people are really starting to drill in and kind of kick the tires on those growth figures. Ned Davis had a very interesting note out looking at what they call paper gains in earnings, non-operating earnings. A lot of companies booking big gains from AI investments, from the value of those AI investments going up on paper value. They're accounting for almost 9% of earnings, more than double the prior year. So there is a lot of nervousness, even though fundamentally, the move up in the semiconductor stocks is mind-boggling, but those valuations didn't really get to what you would consider bubble territory because everyone is assuming that profit growth is going to continue as we build out all these data centers. So I think at the end of the day, it all goes back to yields. We're looking at the 10-year higher today. Yeah. All this credit, all these loans being taken out to build out these data centers, and the higher yields go, I think the more people get worried about, the return on investment and what that'll look like. Yep.
Well, it's one thing to consider the investment in the infrastructure that's powering AI, but can I ask you about OpenAI as well? Bloomberg reporting late yesterday that their revenue run rate for this year is $40 billion, about double the rate of 2025. How does that set the stage for a listing later this year?
Well, so we still don't know. They haven't come out and confirmed whether they plan to list this year or maybe early next year. So we're if anyone has tips on that,
anticipated one at some point.
Yeah, at some point they'll list. If you have a tip on that, I'm all ears. My inbox is open. But it certainly sets them up for what I think will be a very attractive and heightened interest and demand for an IPO when and if they decide to do it in the near future. Obviously a lot can change between now and when they do, get the paperwork ready and actually file and start marketing it. But I guarantee, you look at the demand for SpaceX, even though the shares, kind of stumbled there after they listed, the demand from the investing community, that retail demand especially, and in the case of OpenAI, I think the institutional demand is going to be even higher, as well as for Anthropic. I think the Wall Street banks are chomping at the bit for these to get off the ground and start trading. So definitely will be a lot of interest and demand to participate in those IPOs.
Two monster deals on the way. SpaceX, by the way, is still holding above its IPO price today. It's down $4, but at $137 a share, about a 3% loss. Mike Regan, great to see you. Thank you so much for having us in your house today. Bloomberg's managing editor for U.S. stocks. We give it to you straight here on Balance of Power, and we'll assemble our political panel next. Rick Davis and Jeannie Shanzano are with us as we turn to Truth Social. A lot of news there today. The ballroom's going to the Supreme Court. This is Bloomberg.
It's 40 on Wall Street. We do check markets all day long here at Bloomberg. A lot of red on the screen today as we head into the weekend here. We have got the Dow, the S&P, NASDAQ all declining. Stocks are falling. Those signs of a slowdown in the economy. Reinforced bets that the Fed will hold rates steady. The S&P right now lower by 13 at 77.85, falling from a record, down by 0.2%. Dow Industrials down now by 102 points on the Dow. That is a drop of 0.2%. The NASDAQ Composite Index down 106. NASDAQ lower by 0.4%. NASDAQ 100 Index right now down by 0.3%. To be sure, not all stocks are lower. The Russell 2000 Index of small cap shares is higher by about 0.4%. We've got the SOX, the Philadelphia Semiconductor Index, down now by 1%. The 2-year 4.15%, the 10-year 4.68%. Gold up 0.8%, 43.87 the ounce, and West Texas Intermediate crude 81.81 a barrel ahead of the weekend here, up now by 0.7%. Keeping an eye on Applied Materials shares after earnings, AMAT down now by 5.2%. Yes, it did give a solid forecast, but that still underwhelmed investors, a sign of the lofty hopes surrounding a company that is key to the AI boom. Again, Applied Materials down now by 5.2%. I'm Charlie Pellet. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, my friend Charlie Pellet will be back in about 20 minutes at the top of the hour, 1 p.m. Eastern Time, with another read on the markets here as we welcome our global television audience to the conversation. I'm glad to say, though, that Kaylee Lyons is already here. A little bit different today on the Friday edition. And thank you for joining us on Bloomberg Radio, Satellite Radio, Channel 121, and we're streaming live on YouTube. You want to do that now before we talk to June. Search Bloomberg Business News Live. I'll never forget hearing Bloomberg surveillance, listening to Tom Keene on December 4th, the morning of December 4th, 2024. There was news of a shooting in Midtown, and it ended up being, of course, United Health Group executive Brian Thompson. That seems like a long time ago by now. And we just received a statement from United Health Group knowing that Luigi Mangione has pleaded guilty to federal stalking charges related to that fatal shooting. 28 years old now, admitting that he shot Thompson outside an investor conference in Midtown Manhattan. United Health with the following statement: Brian Thompson's life was cut short by an act of violence that devastated everyone who knew and loved him. We are grateful to law enforcement for bringing Brian's murderer to justice, and our thoughts remain with Brian's family and loved ones during this difficult time. What happens next? We turn to June Grosso, the host of Bloomberg Law here on Bloomberg Radio. And June, it's great to see you in person. I'm glad that your summer's going well. This story has been a doozy. We should note he did not make a deal with prosecutors. So what happens?
I know. That's sort of unusual. Usually when you have a plea deal like this, it's a plea deal. Here he pleaded guilty, and the judge told him that you're possibly facing life in prison. She mentioned again that there was no plea agreement in place. I believe the federal prosecutors did say that they saw the sentencing range, which is, according to statutes in the federal court, there are guidelines, that it was between 24 to 36 years. So he had to allocute, as they say. The judge asked him about, do you understand what's happening now? Do you understand that you have no right to trial? Do you understand that you will have to serve 85% of any federal sentence that you're given? And he said yes. And then he admitted that he had stalked and killed Brian Thompson. He said at the beginning, after years of enduring severe pain from a broken back and navigating the obstacles of the healthcare system. Then he talked about how he learned about this conference and what he did. So the guilty plea is in now, and the theory, and I think this has been proven, because right afterwards the defense attorneys came outside and talked about double jeopardy and said that they were filing a motion. It's already been filed. The motion was ready. This is to get rid of the state case that's supposed to happen on September 8th. So you take the definite of what's happening in federal court. You're sort of relying on the judge. You're hoping that the judge is not going to sentence you to life in prison. But whatever prison sentence you get will be served in a federal prison, which is preferable to state prison. And you hope that you can get the state charges dismissed. It's kind of a gamble.
Well, and the state charges are murder charges, June, right? They are does that do they carry with it a greater penalty than what he pleaded guilty to today?
No, it's the same penalty, life in prison. So that's the sort of calculation here. But they do have a good case for this being double jeopardy, because it's not only the federal double jeopardy laws, but New York State has a very, one of the strongest double jeopardy laws in the country. And it says that you can't be tried if the circumstances sort of arise from the same act. So they're going to be arguing that it's one person was murdered, it was one event, and he shouldn't be tried again. But the New York DA, Alvin Bragg, apparently is not too happy about this. He at one point said that it was trying to, a federal plea deal would try to circumvent the legal system. So they're going to fight this with all they have. Also at one point he said that if there's a plea, they're going to make a request to the federal judge that the sentencing be enhanced, that it be a strong and tough sentence. So what you're going to see play out now is, legal briefs back and forth, and it all depends on what one judge decides, and then probably if, there'll be appeals of that. But as far as the federal case, it's done. It's over. It's in the history books.
Indeed it is. All right, June Grosso, the host of Bloomberg Law, thank you so much. We'll watch to see when that sentencing comes down and what becomes of the state case, of course, and keep you up to date here on Bloomberg. It was interesting, Joe, to hear June mention, though, the Manhattan District Attorney, Alvin Bragg, who is active in this case, but who our audience here on Balance of Power knows quite well from the charges he brought against then former, now current President Donald Trump in the hush money case, in which he was, of course, initially found guilty and then became president, and that whole thing went away.
That whole thing did. And you remember how often President Trump, well, I guess then candidate Trump, was truthing, so to speak, about Alvin Bragg, to the point where, I mean, that was when everyone developed the habit. You start looking at Truth Social for news. And of course, well, now there's a subscription service on there, Kaylee, and this means a lot to us in the financial news business, because from what we are reading, a number of financial news organizations are paying, it's an exorbitant subscription, along with some bankers and traders who get a look at what the president is saying before the rest of the world.
Yeah, it's called Truth API. Can cost you $100,000 a month. And actually, there was a lawsuit brought against Trump Media, the media company, of course, that runs Truth Social, to try to stop this from going into place. And it's not just those media organizations who brought the suit that have taken issue with this plan and the suggestion that it could lead to President Trump once again being able, or businesses that he's affiliated with, being able to profit off of the decisions he makes as president, what he decides to announce on Truth Social, market moving as it so often is. Conservative podcasters, or those who have been sympathetic to President Trump in the past, also aren't liking the way this whole thing sounds. Did you hear Joe Rogan's podcast just a couple days ago? This was on Thursday. He called this plan crazy. Listen.
He's selling faster access to his tweets, and then you can bet on it.
Bet on what his tweets
on
will
the
be?
markets. Because
wait a minute,
it's literally insider trading.
It's Kashi. You can bet on everything you can fix.
Yeah.
Wait a minute,
Fix your
is
own
that
bets.
real? You get access to a tweet before he makes it, and then you could bet on that tweet? How's that legal?
We'll see.
Wait a minute, what is this? Trump sued over Truth Social advance access sale.
And I'm online in the Oval Office.
Who's telling him this is a good idea? I feel like I need to be closer to
$1,000 contracts. Yeah, it's $100,000 you can get his early tweets.
Hey, you know how crazy that is? $100,000 to get early tweets.
That's what
Joe Rogan, of course, that last voice you heard. Yes, indeed, it is. The one who was explaining this to him, by the way, is Shane Gillis, the comedian.
The sunglasses.
So let's ask. Yes, with sunglasses on. As if you're watching us on YouTube, you would have seen that for yourselves. Rick Davis and Jeannie Shanzano don't have sunglasses on, from what I can tell her. Bloomberg Politics contributors are joining us now. Rick, of course, Stonecard Capital partner, Republican strategist. Jeannie, our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. Rick, if Joe Rogan's saying this crazy and asking whose idea it was and if it's legal, does that mean it might be bad optically for the White House?
Well, you would think this whole scheme is bad optically for the White House, regardless of what Shane Gillis and Joe Rogan come up with. I mean, it's hard to see any rationale that this isn't insider trading. It is fundamentally the use of public information. The President of the United States, hired by the American people, has information no one else does, and every decision he makes on behalf of the American people, has an impact on a market somewhere, including, Kelsey and all these others, betting pods. So what you're doing is you're monetizing that access that the election has given you for your own self-interest. I mean, like, this makes the swamp look like a concrete parking lot. I mean, it's just amazing to me that anyone inside the White House could walk into the Oval Office and say, great idea, Mr. President. Terrific way to make a buck or two off public information.
Standard monthly rate, $100,000. That's $1.2 million annually. Now, Jeannie, if you put the whole class on this, if a subscriber signs a mandatory 3-year contract, it's only $60,000. Why wouldn't you sign up if you want to make money?
What a deal, Joe Matthew. And it's a lot of money when Joe Rogan, I forget how many millions he is making, but he's doing quite well as the world's #1 podcaster. And even he batted an eye at the cost. The real concerning part is, Rick is right, this is insider trading. But for anybody who believes in, supports, loves the markets, as so many people who watch Bloomberg do, what happens when people feel the market is fixed? They don't play in it. And that is a huge, huge problem going forward. That's why all of our security laws are designed to prevent this very thing. Any group of people or individuals having insider information before others. Because what happens over the long term when people feel like the market is fixed? We would get a market like they have in Russia and elsewhere, where people do not feel like they want to engage in it. They don't feel like they want to invest in it. And guess what? Entrepreneurs with great ideas coming down the pike, all of these young people, they can't raise the capital they need. So Donald Trump, in his interest in boosting him and his family and his friends' bottom line, is destroying something fundamental to this country. He's doing it in the open. And I thought what was so telling about Joe Rogan is his stunned silence at the idea that this is all legal. It should not be. Hopefully these lawsuits work. But that is truly the astonishing part of this.
Yeah, well, the fate of this may very well be decided by the courts. A lot of things in this administration ultimately have come down to the decisions of the courts, as our audience knows well. And it looks like another one may come down to the Supreme Court if the president gets his way, as Trump is now asking the Supreme Court to approve the ballroom project after a couple lower court judges ruled that it cannot proceed above ground without congressional approval. Rick, is this the kind of thing that the highest court in the land you think will weigh in on?
I can see them deferring to the lower court rulings, which is the vast majority of these shadow docket outcomes, is just not taking the case. I think they put themselves in an incredibly difficult position because the lower court has already said this is a congressional act that is only approvable by Congress. And what is the Supreme Court going to say? That Congress doesn't have the right to control these public buildings, which is the case in statutes. So I think they're going to want to stay out of it. Trump will try to play the ref, and goad him into taking it. But my guess is we've already seen, the outcome of multiple federal judgeships. And my guess is you're not going to see anything different here.
I don't know. I mean, we're showing images of this construction site right now on YouTube. If you're with us, search Bloomberg Business News Live. You can even pause it and back it up. It looks like somebody dropped a bomb on the East Wing and that entire side of the campus. Jeannie, do we really want this to be halted where it is now?
Yeah, the great hole in the ground at the White House. Oh. One of the judges who ruled on this said something to the effect of, that is Donald Trump's doing. And while they may not take this case, I think there's also another option here, very typical of the Supreme Court, which is they will follow the dissenter at the appeals court level and say that the plaintiffs have no standing in this case. So I think that's also a possibility. Meanwhile, on the day you guys are talking to Mike McGee about consumer sentiment, we have retail sales in July falling. We have Donald Trump's approval ratings at the lowest ever. Gas prices prices up and all the rest. The president obsessing again about a ballroom and also, by the way, the Kennedy Center last night. So it's really detrimental to his own party.
It's going to get his name up there, as it turns out, either way. It'll just be under President John F. Kennedy's name. Rick Davis and Jeannie Shanzano, our Bloomberg Politics contributors, are back in hour 2 here on Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
President Trump joins the Friday exodus to Long Island. Welcome to the Friday edition. With crime fighting on the agenda today, the president speaking to supporters later in Garden City, New York. I'm Joe Matthew in New York alongside Kaylee Lines in Washington. Kaylee, the president leaving the bubble not to talk about affordability today, but crime stats.
Yeah, of course, as always with President Trump, his remarks in Long Island could take any number of directions. But yes, he's going to be with law enforcement and first responders on the ground there for this speech, highlighting crime, as you say, even with other issues still simmering in the background, including the conflict with Iran, as the Treasury Secretary Scott Bessent is promising unprecedented economic isolation for Iran. Joe, he says, watch this space.
Yeah, that's right. Maybe we'll learn next week what he's got in mind with a combination, Kaylee, of the blockade and economic pressure, knowing that we have had sanctions on Iran for some 47 years. And the impact that this whole war has had on energy prices is, of course, very important in a state like New York. We're above $4 a gallon nationally. Kaylee, right here in the state of New York, it's averaging $4.14. You can probably find something more expensive in Garden City. And to your point, if he starts doing the weave, maybe we'll hear about all of these issues later today.
Well, and as we consider the price of gas and affordability challenges, it translates directly into the consumer sentiment figures that we got this morning. A deterioration in UMich consumer sentiment for both Democrats and Republicans. Interesting as we march toward the midterms with 82 days to go here. A decline in retail sales as well, even though gas does have a little bit to do with it. So we'll get into all of that this hour. But we begin first with how the markets are reacting to that data as we turn to New York, where you are, where Charlie Pellet also is. Hey, Charlie.
Well, hello there, Kaylee Lines. Indeed, the U.S. stock market looks like it's running out of gas today with the Dow, the S&P, NASDAQ, all in the red. We are, however, when you run the weekly numbers, on track for a weekly gain on the S&P of 0.3%. I'll have more on the markets for you coming up in just a moment. Developing story, though, headline right now on the Bloomberg Professional Service. The Justice Department and a U.S. financial regulator, the CFTC, are probing transactions around Radiant World, which is the private firm that has rapidly risen to become one of the world's largest iron ore traders. Again, developing story headline right now on the Bloomberg Professional Service. The Dow, the S&P, NASDAQ 100 index, all in the red right now. Russell 2000 index of small cap shares is higher. That index up by 0.3%. But putting it all in context, looking at a loss now of 0.2% on the S&P. We have got the Dow Industrials down 148, drop there of 0.3%. S&P at 77.79, pulling back from a record. NASDAQ 100 right now down 0.4%. 2-year 4.16%, the 10-year 4.69%, and the 30-year 5.26%. Gold up $33 the ounce, 43.83 on the ounce, with a gain from the precious metal of 0.8%. WTI, West Texas Intermediate crude up 1% ahead of the weekend, 82 even a barrel. Barrel of Brent, 88.06, higher now by just about 1.1%. Again, recapping here, S&P down 19, drop there of 0.2%. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie, always an honor to watch Charlie Pellet work here at World Headquarters in New York. I now know exactly what it's like to be atop the Gilded Tower. Yes, we're in New York on Balance of Power for the Friday edition, and my partner Kaylee Lines is holding forth in the nation's capital. We'll have our panel with us this hour, of course, Rick Davis and Jeannie Shanzano, and so welcome to the Friday edition of Balance of Power. The threat from President Trump against Iran has been total obliteration unless they reopen the strait. That threat may be changing to economic isolation. That is the way forward, it seems, for the administration. And based on analysis that we have seen from Bloomberg Economics, it could be easier said than done. The Treasury Secretary, Scott Bessent, laying out the 1-2 punch threat today in